by Rochester Reinsurance and Tanzania Reinsurance Company, and co-sponsored by Association of Tanzania Insurers and Continental Reinsurance. Our gold sponsors for the event are Alliance Insurance, Sanlam Insurance, Meticulous General Insurance Company, Bharat Reinsurance Brokers, Howden Puri Insurance Brokers, Jubilee Insurance, NBC Bank and Zanzibar Insurance Corporation. Our silver sponsors for the event are Tanz India Assurance, Reliance Insurance, Mayfair Insurance, CRDB Bank, MGen Tanzania Insurance, Assemble Insurance, Smart Policy Insurance Platform, Heritage Insurance, Score Insurance Brokers, Demeter Insurance Brokers, Reinsurance Solutions, Strategies Insurance, Metro Life Assurance, Malembe Insurance, Grand Re, and Milmar Insurance Brokers.
Hello everyone, good morning, good afternoon, and good evening to those who are here with us from different parts of the world. Welcome to the first ever Virtual Insurance Convention 2021, organized by Insurance Institute of Tanzania. We welcome our viewers and audiences for today's session. We are hoping that from wherever you are safe and you're healthy and you're taking care of yourself and your loved ones. In today's tough times, we have managed to still do our insurance convention for 2021. With me, I'll be hosting this this session. I'll be supported by Kemi Barrow, an outstanding insurance associate. Kemi Barrow, you're most welcome into today's insurance convention day. You would agree with me, Kemi Barrow, that even during these tough times, the Institute has been much more resilient to still organize for this event. What do you think?
Benjamin, firstly, it's so exciting to be here. I'm glad to see that the convention is still happening, even though it's virtual. And in these times, when the pandemic has made us do things differently, it's business unusual. So this conference being the first is really a great stride for us.
Spot on, I agree with you. So thank you so much, Kemi. Would you please mind to tell us the program for the day?
We have a fully packed session, so please don't go anywhere. The day starts from now, and we go all the way till about 2 p.m. And throughout the day, we're going to have a mix of presentations, but also panel sessions. And we have a fantastic list of presenters from Tanzania, from Kenya, from Zambia, and also the UK. Get to learn a lot about Tanzania, but also other markets. So this convention, Benjamin, is something that we've never done before, but we've done it in an excellent way so that everyone gets a bit of a flavor of what is happening in agriculture insurance in Tanzania, but also lessons from other markets.
Indeed, thank you so much. Please don't forget that we're live on YouTube, Facebook, and LinkedIn. Hashtag Insurance Convention 2021. Without much further ado, allow me to introduce the chairman for the organizing committee for the Insurance Convention 2021 and the vice chairman for the Insurance Institute of Tanzania, Dr. Suresh Kumar. Suresh Kumar also holds professional titles. Suresh Kumar is a professional insurer and a business coach with over 30 years of experience in the insurance industry in different parts of the world. He has experience of starting successful greenfield insurance corporations in Tanzania, Uganda, Rwanda, Namibia, and Sri Lanka. He is currently the CEO of Meticulous General Insurance Company Limited and also the chairman of the General Insurance Council of Association of Tanzania Insurers and the vice president of the Insurance Institute of Tanzania. He is a fellow of the Insurance Institute of India, fellow of the Chartered Institute of Marketing, and a certified risk management professional. On the academic front, he has MBA in strategic management and a PhD in psychology. Round of applause for our own Dr. Suresh. Karibu sana.
On behalf of the Insurance Institute of Tanzania, I have great pleasure in welcoming you all to this 23rd National Insurance Convention 2021. The Insurance Institute of Tanzania has been organizing the Insurance Day, as it was called in the past, since 1963. And I'm very proud to say that over the years, the insurance conference, which has been held in Tanzania, has been successful in terms of creating a lot of value for the insurance industry, not just in Tanzania but in the entire East African market. This has been one of the most sought after conferences for insurance, especially insurance and risk management in East Africa. Unfortunately, last year we could not hold our annual insurance day of pandemic. In 2021, we decided we want to have it because in Tanzania, we have not really had much of a problem regarding the pandemic. So our decision was to hold it in a physical form in 2021. But realizing that the pandemic is not really subsided in the rest of the world, we decided to hold it as a digital event. And one of the greatest advantage we had when we took the decision of having it as a digital event was that we were able to invite experts from across the world. So in today's sessions, you will find people speaking to you from UK, from India, from Zambia, from various parts of the world, who will be interacting with all of you and will also share their experiences and knowledge and possibly give us ideas as to what kind of takeaways can we have in terms of managing agricultural insurance, especially in a developing economy. So friends, I would request you to spend your next 3 hours taking down notes. Make sure that you have your pen and paper with you because you will be hearing some nuggets of wisdom from very, very experienced speakers, especially on agriculture risk management. Welcome to the National Insurance Convention 2021 organized by Insurance Institute of Tanzania.
Thank you. Great opening remarks from Dr. Suresh, the chairman for the Insurance Institute of Tanzania.
Oh, I totally agree, Benjamin. It's so rich in terms of what he was able to share with us to get our audience from all over the world to understand a bit more about this insurance convention.
Excellent. And Insurance Institute of Tanzania does a lot of things in this country to promote insurance. They're doing capacity building, they take people to trainings, they're also assisting on the other arm to speak to TIRA on how to coordinate insurance businesses through these institutions. Can we take a look and see what does Insurance Institute of Tanzania is doing? Welcome viewers to be with us for a minute presentation.
The core philosophy of IIT is to strengthen the insurance market through capacity building programs that it has been doing for the last 55 years.
We create insurance professionals to cater and support the growth of insurance expertise in the country.
IIT has helped many professionals in the industry, including me. I'm humbled to have been part of it and to grow professionally.
The best thing about IIT is that they use professional practitioners for their training programs, which give us, their members, the ability to learn from real work experience.
Our courses are aligned with the industry demands to ensure that IIT is filling the gap of capacity building at the right time and accordingly. At the Institute, we strive to bring experienced experts locally and internationally to train our members so that they can learn from the best practices from the market and ensure that they are updated on the latest market development.
IIT provides a platform by which the members can sit for their CII exams so that they are enabled to grow professionally and career-wise.
As the current patron of the IIT, we support the IIT to make sure that it supports the market by its capacity building programs.
IIT collaborates with the different institutions like Financial Sector Deepening Trust Fund, Imatic Technology Tanzania Limited, College of Insurance Nairobi, Tanzania Insurance Company, Africa Re, Zepli, and others.
All of us, we are working hard for the betterment of Insurance Institute of Tanzania, which is imparting training to its members. That is also preparing the faculties within the industry for the betterment of its members. And we are also finding the new ways for the improvement of the industry. We are getting the very good support from TIBA, from ATI, from Atlas and other its members, and on the top of that our regulator, Tanzania Insurance Regulatory Authority. We are committed to work hard and to do the best for the betterment of the industry.
The insurance industry in Tanzania has got various stakeholders: the insurers, the reinsurers, the brokers, agents and loss adjusters. To bring them all on a common platform and to discuss various issues which are pertaining to the industry as well as in terms of general interest, Insurance Institute of Tanzania has started organizing the Indemnity Club meetings for the past 2 years. This is a common platform for all the stakeholders in the industry to come and discuss various issues of common interest as well as to provide a great networking event for them. These events are held at times a year, and various speakers, not only from the insurance industry but from different sectors, are brought in over here to speak to the members. One of the very prestigious conferences or seminars in insurance which is being held in East Africa is the Insurance Institute of Tanzania. We have been holding Insurance Day for the past 23 years, having started way back in the 1997. This conference brings various stakeholders from East Africa, and not only from East Africa, across the entire international landscape on a common platform, and then various matters of insurance and other related risk management issues are discussed. Last year, the Insurance Institute of Tanzania decided to rename the Insurance Day as the Tanzania Insurance Convention. So in 2021, we will be having the Tanzania Insurance Convention on the 23rd of September, and we invite you all for this particular convention, which will be held digitally.
IIT also played a key role in digitizing the marine insurance known as Tanzania Imports Insurance Portal.
We have recently signed up with College of Insurance Nairobi for the conducting professional insurance exams for IIT also provides continuous professional development opportunities for the members in the country.
23rd Insurance Convention. Insurance Institute of Tanzania has been doing a great job in terms of having conferences that provide opportunities for networking and also looking at partnerships from outside Tanzania. I think having learned all that about the Insurance Institute of Tanzania, Benjamin, I think this is a good time to actually find out about the landscape of agriculture and also agriculture insurance for the country. Dynamic parts in terms of, I'm sure even our audience must be wondering what exactly is happening. Is this the main area and focus for revenue contributions to the gross domestic product, and also in terms of the employment population. So I think this video should be able to answer all of that, and I believe it will also set the tone for the rest of this convention.
Thank you. Obviously, we all know agriculture is the great driver of the economy, contributes to around 29% of the GDP in the country, Kemi?
Yes, it's exactly. Yes.
Truly.
And some other figures that we know, it's about 77% in terms of employment for the workforce in that particular market. Yes.
Yeah, can imagine. So let us have a look on the video.
Agriculture sector has been playing an important role as a key driver for economic growth of Tanzania since independence, making a contribution of about 32.4% of the GDP. As of 2016, Tanzania had over 44 million hectares of land, with only 33 under cultivation. Approximately 65% of the population depends on agriculture directly and indirectly. Nearly 70% of the poor population live in rural areas, and almost all of them are involved in the agriculture sector. The top 10 main food crops cultivated in Tanzania are maize, sorghum, millet, rice, wheat, beans, cassava, potatoes, and bananas. The agricultural industry makes a major contribution to the country's foreign exchange earnings, with more than $1 billion in earnings from cash crop exports. The 6 main cash crops are cashew nuts, coffee, cotton, sisal, tea, and tobacco. At one point in its agricultural history, Tanzania was the largest producer of sisal in the world. The agriculture faces various challenges, and it has been the gutsy to overcome these challenges in order to reduce poverty and increase productivity. Farming efficiently has been a challenge for many farmers, and lack of finances and farming education has caused many to remain subsistence farmers. Other challenges on the agriculture industry of Tanzania include climate change and the resulting droughts, floods, and agriculture temperature shocks, and a lack of agricultural technology. These challenges requires the support of various sectors including insurance and banking in order to increase productivity from the sector and contribute much more to the country's GDP. This conference therefore shall play a guiding useful insights that can be put into practice to sustain the agriculture sector in Tanzania through finance and transfer solutions provided by the financial sectors.
Welcome back on the session. Please remember that we're live on YouTube, Facebook, and LinkedIn. Hashtag Tanzania Insurance Convention 2021. Please don't forget to post your comments and questions. We are listening and responding to you live. We're inviting our first speaker of the day, Mr. Ayandev Saha, who will be speaking about the role of agriculture insurance in the development of the sector, from social protection to commercialization of smallholder farming. Ayandev is working with the Ministry of Finance Economic Planning, Government of Rwanda as a Strategic Advisor, Financial Sector Development Directorate. In this capacity, he oversees all financial sector including banks, insurance, pension, and capital markets. He holds an MBA in Insurance Risk Management and Masters in Economics.
A very good morning. Thank you for inviting me to this conference and for giving me the opportunity to share my experience in working with the various governments in design and implementation of agriculture insurance schemes. I'm extremely overwhelmed to get this opportunity to address you all. Before I start, I wish to congratulate the organizers and the organizing committee for choosing one of the world's most pressing problems as the theme of the conference. We can develop the agriculture sector, and importantly, the role of financial sector and financial services in driving agricultural growth. Agriculture finance and agriculture insurance are strategically important for eradicating extreme poverty and boosting shared prosperity. Today, there are some 500 smallholder farms worldwide, supporting around 2.5 billion people. With effective agriculture finance, which includes both products and services, these people can increase their productivity and so reduce their vulnerability. With a greater and a higher quality yields, they can even start producing a surplus to sell at a local markets, benefiting not only others in their communities, but also their financial security. Our aim as players in this financial sector should be to transform this smallholder agriculture into a successful rural agribusiness that are profitable and in which agricultural surpluses can also be marketed. For me, this is the journey of commercialization of smallholder farming. Hence today, in my presentation over the next 15 minutes, I would like to emphasize agriculture finance bundled with agriculture insurance as one of the top and key priorities at a policy level for the government. What I have done, I have put few slides so that we speak on the context, and I'll share a few slides with you. So as I mentioned, the most important thing is the role of the insurance in the development of the sector. from social protection to commercialization of smallholder farming. And I define what I mean by commercialization. Today, when we sit at the government and when I was having deliberation with the various governments, it is equally important to see what are the most important risks that the governments are facing today. It starts with the conflict, violence, and war as one of the important risks. We all know economic uncertainty and financial crisis. There has been in the past several incidents to highlight the importance of this particular risk. The climate change. Climate change will enormously stress the economic, social, and political system that underpin each nation state. Climate change will have far-reaching effects on crop, livestock, and fisheries production, the prevalence of the crop, pest, food production system, and food security. And the last but not the least is extreme poverty, inequality, and income distribution is seen as one of the biggest risks. Poverty and inequality are intrinsically linked to each other. Poverty reduction, especially for the poorest, can be greatly enhanced through distributional policies. Poverty is believed to be the lead cause of overpopulation. And with the increasing population, where we are expected to reach 9.8 billion people by 2050, this will actually lead to a severe food scarcity and food shortage across the globe. Today, when we look at the growing population, the climate change, and migration, all these three things taken together, today also we need to understand from a very recent published report that 86 million people in sub-Saharan Africa is going to experience the migration due to internal climate related issues. And also the growing population, and this population is going to grow leaps and bounds in our part of the continent. So giving these three things in context, the climate change induced migration induced by climate change, and also the extreme growing population, whereas our food productivity is reducing, creates major challenges which are all interlinked to each other. And these challenges needs to be addressed because these are seen as the biggest risk that the governments are facing today. So the global challenge, when you look into the agriculture sector, it is more linked with food as well as agriculture. The food in terms of food stability and availability, the food access and utilization, and last but not the least is the systemic challenges. Make the food system more efficient, more inclusive, and more resilient. Meet the needs for the coherent and the active national and international governance. So today, when we think of agriculture finance or agriculture insurance, these are the broad three challenges that we need to see how we address them. Now, when we think of food security, it is not very far. Though I said, we are going to reach 9 billion people by 2050. The climate change is creating a significant impact on the food productivity, but food scarcity can even happen as we live on today. Let's look at the scenario of the pandemics. Could COVID-19 pandemic lead to the global food crisis? Now, today, when you look at this graph, which has been published by the World Bank database, top 50 countries most affected in COVID-19 represent on an average 66% of the world food export. So food production could be negatively impacted because of this COVID by increased workers' morbidity and farmers' morbidity, disruption in the supply chain, which we are all experiencing, and containment measures, escalating export restrictions, and many of the countries have already done in the recent past few months, would actually multiply the initial shock by a factor of 3, with world food prices rising up to 18% on an average. More importantly, the import food dependent countries, which are in largely the developing countries and the least developed countries, would be mostly affected. The question then comes is, why do we need to target the small scale farmers? And somewhere in the beginning, before the starting of the presentation, I highlighted the importance of the smallholder farmers. Today, more than 80% of the world farms operate on less than 2 hectares of land And on contrary, they provide an estimated 80% of the world food produced in Asia and the sub-Saharan Africa. The global population is projected to reach 9.8 billion people in 2050, and all the increase is expected to come from the developing countries. Countries with a large and a growing rural populations will depend even more on agriculture, not only for food, but also for employment and income. According to the widely cited estimates, world food production must double by 2050 to keep up the population growth. Some statistics even says up to 70%. The smallholder agriculture, especially if they are well integrated into a diversified rural economy and agri-food value chain, they can contribute even more to inclusive growth and employment generation. Today, even when we look in Tanzania, and especially when we look at maize value chain, one of the most important food crop value chain, the small scale farmer produces 85% of the national production, while medium and a large scale just marks up to 5 to 10% respectively. Hence, it is very important, be it in the global context, be it the regional context, and be it in the country context, that small scale farmer needs to play a very important role in the light of growing agricultural production, productivity, and food security. But what are the key challenges that the smallholder farmers are facing today? It starts with a limited farm size. High population growth and inheritance-based land fragmentation have actually resulted in decreasing the farm size. The second most important challenge, the second and third, is actually what we, the financial service provider, needs to address. One is access to financial services, mostly excluded from productivity enhancing financial services due to agriculture specific risk and lack of formally defined property and land use rights to act as a collateral. The climate change, the vulnerable to more frequent extreme weather events due to lack of access to formal safety nets and high reliance on climate dependent agriculture. The price hikes and volatility, difficult to finance the crucial inputs needed to stay in business. Many of the times the farmers are not able to access the inputs in spite of they are available in the market. The main reason is the price fluctuation and the high price of inputs in terms of seeds, fertilizers. Many of the countries in our region and in our continent actually import some of these seeds and agricultural inputs. So any type of price fluctuation actually leads to less buying by the farmers, and which actually results in suboptimal investment decision from a longer perspective. The last but not the least is access to modern markets. Lack of information regarding price, supply, and demand and quality standards leads to a smallholder farmers to face prices from opportunistic middlemen and the traders. So what is important is to see how we can commercialize the farming. And when I mean farming, the more importantly, the smallholder farming. Now, the commercialization of agriculture can happen in two ways. One is mechanization and the second is modernization. Now, with this mechanization and modernization comes is undoubtedly is the access to finance. Be it mechanization and be it modernization, there needs agricultural investment. And again, just to look at the figures of 9 billion, the amount of people that needs to be fed, current production, that production needs to increase by 80%, 70 to 80%. Now that all shows that there has to be a significant amount of investment that is currently happening. And in doing that, we also need to combat certain related agriculture risk. Now, this agriculture finance, while it happens, there is also a lot of covariant risk. And that means if the risk happens, be it pest and disease, be it drought, be it flood, it does not only affect one farmer, but it affects many farmers. This covariant risk needs to be addressed by agriculture insurance. And that is where I believe somewhere agriculture credit and agriculture insurance are the key pillars when it comes to commercialization of the agriculture sector. Access to finance is critical for the growth of the agriculture sector. How a small commercial farmer looks different from today's farmer if this actually happens. The farmer will have a bank account and access to financial services and products, focuses his or her production on cash crops, not only consumed his or her own family. Today, many times when I go and visit the smallholder farmers, they actually produce what they can consume. They do not want to produce what they need to sell, and knowingly that they can make more money out of it, but they are not very sure about the market. And one of the common thing that I hear from them is, I don't want to do French beans, I don't want to do chili, rather I will do maize and rice. So if there is no market, at least I can consume. So it is very important how we start focusing, their thoughts, and as well as creating a right infrastructure to provide them and to take the decision in actually going for cash crops. Has a formally registered business, has experience and the technical ability to use mechanization and farming inputs, has the capacity and the willingness to expand his or her farm with the proper support. The key gaps that we can see in terms of agricultural finance value chain, the agriculture is predominant activity in African economies, yet less than 4% of the total commercial bank lending goes into the agriculture sector. The financial institutions often cite the lack of usable collateral, high transaction costs due to the remote clients, dispersed demand for financial services, the lag between investment needs and the expected revenues, lack of irrigation, pests and diseases. These are so many reasons which are generally cited when you ask why, or generally try to find why the lending is not happening to the smallholder farmers. So it's limited bank capacity, low financial literacy, low level of loan distribution, and more importantly, insufficient insurance. So the question that comes is, then why should government support agriculture insurance? As we understand that agriculture insurance is important, then should it be done completely by a private-led model, or should it be there, the government support is important? Now, when we look into some of the policy level challenges, one is loss to the local, national, and global food security, poor access to credit, inhibiting productivity, enhancing the investments for small-scale farmers, corruption and fiscal leakages amidst intergovernmental transfers made to respond to the climate shocks. Now, some of these policy level challenges can actually be addressed through agriculture insurance, and also some of the market failures in terms of information asymmetry. Sometimes when we try to design agriculture insurance scheme, the data plays a very important role. And this is where, again, government can come in investing and making availability of agriculture data and related information. Covariate risk exposure and systemic risk can generate major losses in the portfolio of insurers. This is again a place where the government can play a very important role by facilitating risk financing, access to reinsurance markets. And this we'll see from some of the examples that I would like to give, be it from Kenya, Uganda, Rwanda, where actually government has played a very important role in bringing the insurance companies together, in creating a pool structure to underwrite the agriculture risk. And the last but not the least is the low risk awareness and lack of insurance culture. Today, if you ask me, the most of the farmers don't trust or have never experienced agriculture insurance or any financial products. In that given scenario, again, the government has to play a very important role in creating targeted financial awareness campaigns targeting small scale and smallholder farmers. So in short, today when we discuss, be it in the Ministry of Agriculture, Ministry of Finance, what their mandate is to create financial resilience along with physical resilience and social resilience. Now, in terms of physical resilience, it is sometimes quite visible. The governments are investing on high quality seeds, hybrid vaccination process for livestock, fertilizers, pesticides, subsidy on agricultural input. Also on the social resilience, you will see a lot of social protection structures are available in terms of coping with the risk. The government has also, most of the governments has started policies like land consolidation program, crop intensification program, putting the farmers into cooperatives. But the most important, and we should not forget, is as important, rather let me put it this way, is financial resilience. And this is the core mandate of the line ministry and the government. In some countries, it is the Ministry of Agriculture who takes the lead. In some countries, it is the Ministry of Finance. But what is important is to have a pre-arranged, predictable funding for post-disaster activities to protect the fiscal balance, subnational governments, households, and businesses. Today, whenever a drought happens or a flood happens, it is the government who tries to come in forward, either in terms of relief, response, recovery, and the government's money comes from the treasury. It's the tax money, the taxpayers' money, or the donors' money, or the grants. But if we can actually use financial instruments, then it can actually solve certain or contribute in terms of mobilizing certain resources at the time of the disaster. So today, when we think of National Agriculture Insurance Scheme, where is it in terms of broader policy objective? Agriculture risk insurance is protecting the agriculture producers from the losses. And as you see, there are various instruments that can be used based on the different risk layer, be it low risk layer, medium risk layer, and high risk layer. Agriculture insurance actually comes in the high risk layer, which is a sustainable and financial payout that happens to the affected insurable households or farmers. This policy can also be designed at a macro level, at a meso level, and a micro level. Now, when we look at this National Agriculture Insurance Scheme, these are some of the countries which has a very well-established agriculture insurance scheme. There are a few other countries which are working on National Agriculture Insurance Scheme, but these are some of the countries which has already implemented. And I thought in this convention and conference, it is important to share what is happening in some of the neighboring countries or in the region. Uganda has implemented a National Agriculture Insurance Scheme, which is called as UAIS. It's a public-private partnership between the government of Uganda, represented by the Ministry of Finance, and the private insurers and the private players. Uganda Insurer Association is playing a very important role as the scheme is implemented through a consortium, which is called as Agro Consortium, which is a coalition of currently 11 insurance companies licensed to underwrite the agriculture insurance. And more importantly, they underwrite both crop and livestock. Now, this is quite similar even in Rwanda, because sometimes when we think of National Agriculture Insurance Scheme, we always focus on crop and sometimes we leave livestock. But especially in this part of the region, when you think of the agriculture production and agricultural value, the livestock contributes significantly. So it is equally important to protect the livestock sector as well. And Kenya is another example. In March 2016, the Ministry of Agriculture, together with the World Bank, launched the Kenya's National Agriculture Insurance Program, which is again designed on a public-private partnership model, with one part focused on crop and the other part focused on livestock. The Kenya had adopted a similar co-insurance agreement model to underwrite the government-subsidized Kenya Livestock Insurance Program, which is commonly called as CLIP. It's supported by the 6 leading co-insurers, and the Kenya's crop insurance program, which is again underwritten by 6 to 7 insurance companies, with APA Insurance is leading it. And now, since I'm based out of Rwanda and Kigali, so let me give the example of the Rwanda's National Agriculture Insurance Scheme. It started in 2019. But before going into the agriculture insurance scheme, let me put the context in terms of Rwanda. The agriculture sector has played a tremendous role in improving the livelihood of the Rwandans and sustaining the country's economy. It contributes 31% to the national GDP. Beyond GDP, it covers 90% of the food need, generates 50% of the country's export, and more importantly, the 70% of the Rwandan population is actually engaged in agriculture, which is quite similar when you look in terms of percentage, but not in numbers in the Tanzanian context. It's an important, as 25% of the GDP in Tanzania is coming from agriculture. 60 to 70% of the people are engaged in terms of livelihood in agriculture. And the last remains equally the same. The majority of the farmers still rely on rain-fed cultivation and remain vulnerable to natural disasters. So what solution the government of Rwanda adopted? NIS was implemented a National Agriculture Insurance Scheme through a multi-agency framework of insurance companies, financial institutions, NGOs, among others, under the overall guidance and the control of the Rwandan government. Government is primarily responsible for promoting insurance through a consultative and a participatory approach. Government is also contributing, government is also primarily responsible for promoting insurance through a consultative and participatory approach. Government is also contributing 40% of the premium subsidy. Now, what are the benefits that we can see from the Rwandan scheme? It reduced the vulnerability of the farmers. The scheme is available across the country in the selected value chain. It covers both the commercial crops as well as the food crops. It builds on the natural aggregators that are efficient and cost effective, example, farmer cooperatives, milk collection centers, MFIs, and banks. Use of technology at enrollment and claim stage, driving efficiency, minimizing the cost, enabling fast and error-free recording of policy details. And the technology has been used across, be it crop insurance, be it livestock insurance. And we'll see one example of the technology application when it comes to livestock value chain. In terms of who are the policy holders, this scheme is written for the individual farmers, small-scale farmers, and commercial farmers. The insurance companies, currently 5 local insurance companies are participating in the scheme. KMD London is providing technical assistance. So Access to Finance Rwanda is similar like FSD's Tanzania. They played an important role in hiring a farm with experience in agriculture insurance. And they assisted Ministry of Agriculture and Ministry of Finance in underwriting, in designing and implementing the scheme. The product is Area Yield Index Insurance Scheme for crops. I'm not going in the details of the structure, but I think during the conference, you will hear many speakers speaking about Area Yield Index Insurance Scheme in much detail. It basically protects the average production of the farmers, the individual mortality risk for the livestock sector. The distributors, as I mentioned, the program is, the scheme is distributed by farmer cooperatives, SACCOs, banks, and MFIs. The most important, the moment of truth is when farmers starts getting benefit. And today the scheme has covered more than 125,000 farmers across varied agricultural value chain in terms of crops like French beans, Irish potatoes, chilies, which are considered to be high-end commercial crops, but it also covers rice and maize, which is an important crop in terms of food crops and in terms of food security. And all these are happening through access to finance and linkage. As I mentioned, I will touch one slide on the role of technology. So Rwanda government adopted RFID microchip in terms of identification of the cattle and the livestock. Now, this is very important because one of the risks that we always see, be it the banking, be it the insurance company, is the identification of the livestock, where the livestock is, how the health of the livestock is, whether the farmer is taking due care or not. At the time of the death, is it the same cattle which has been insured has died because of ABC reasons? Is the vaccination program happening? So all this information can be captured on a real-time basis with a unique identification number. There are a lot of methodologies out there in terms of identification of a livestock, in terms of tattoo, in terms of plastic tags, in terms of RFID ear tags. But we decided RFID microchip. The reason is because this actually mitigates any type of fraud. I'll not say the mitigate, I'll say it eliminates any types of fraud that we can think when it comes to livestock insurance or livestock management. Now, this is equally important for banks as well as for insurance company. And today this entire program is being funded by the government of Rwanda in terms of buying the livestock microchip, using extension officers to inject the microchip in the cattle, scan the animals, maintain the health records at a local level, so that this can also be used for various other policy purposes in terms of when epidemics outbreak happens or to run a vaccination program. So what happens in terms of insurance, apart from a mitigation of risk, fraud risk, it also reduces our cost, in terms of underwriting cost, because now there is a better understanding of the insured asset, which is the life of the livestock. The entire program is done on a mobile-based platform in terms of onboarding the clients using mobile money. So also the transaction cost, which is a common reason of the premium being high, apart from the risk, is also gets reduced significantly. So lastly, the last slide is key determinants for the uptake and the strategies to improve agriculture insurance. I think the first important thing is the product coverage and the product quality. It should respond to the needs of the farmers. It should respond to the key stakeholders who are participating in this agricultural insurance scheme or agriculture finance scheme, be it banks, be it insurance companies, be it MFIs. So everyone's need needs to be responded in the ecosystem. The product and the contract design, bundling insurance with other services, it's very important because in some cases you might not have government subsidy. If government subsidy is not there, it is very important to find a ways on how agriculture premium can be financed through agriculture insurance credit linkage. Income and affordability is very important to be considered at the time of designing the scheme. Education, knowledge, and information, and don't miss the cultural perception. So why I always keep saying this is because the farmers before insurance, they had their own risk scoping strategies. It is important to build on those risk scoping strategies and strengthen them further. Last but not the least, the behavioral and social cultural factors should be considered at the time of designing the scheme. So lastly, the development and commercialization of agriculture today requires the financial services and financial service providers that can support larger agriculture investment and agriculture related infrastructure that require long-term funding, a greater inclusion of both youth as well as women in the sector, and advancement in technology. An important challenge is to address a systemic risk through insurance and other risk management mechanisms and lowering operating costs in dealing with the smallholder farmers. Finally, with this slide, the adoption of Sustainable Development Goals by United Nations led to the wide recognition and paramount importance of the agriculture sector in ensuring the socio-economic progress. It is currently the world's leading employer, which is also the case when we look at Tanzania, and playing a pivotal role in the livelihoods of more than 40% of the world population. And if I'm not wrong, in Tanzania, it is more than 70% of the population. So thanks once again. I thought, let me share my thoughts on this line in terms of why it is that the government needs to think of the agriculture finance, agriculture sector, why we as players need to come together to make this happen, and how we can use technology, how we can use the existing infrastructure in making this happen. So thanks once again. It was indeed my pleasure to share my thoughts and my experience with you all. Thanks once again, and have a nice day and a great conference.
Thank you. So one of the key takeaway from INF presentation, you'd see that Rwanda implemented the National Agriculture Insurance Scheme in 2019, and I think we now see the role of if the government is fully engaged, into this public-private partnership in developing an agricultural scheme, insurance agriculture scheme in the region. It is very possible, to as well have the insurance agriculture scheme to enhance and grow our economy through agriculture. Stay tuned. We'll be right back in 3 minutes after a commercial break. Thank you.
This conference is officially sponsored by Rochester Reinsurance and Tanzania Reinsurance Company, and co-sponsored by Association of Tanzania Insurers and Continental Reinsurance. Our gold sponsors for the event are Alliance Insurance, Sanlam Insurance, Meticulous General Insurance Company, Bharat Reinsurance Brokers, Howden Puri Insurance Brokers, Jubilee Insurance, NBC Bank and Zanzibar Insurance Corporation. Our silver sponsors for the event are Tanz India Assurance, Reliance Insurance, Mayfair Insurance, CRDB Bank, MGen Tanzania Insurance, Assemble Insurance, Smart Policy Insurance Platform, Heritage Insurance, Score Insurance Brokers, Demeter Insurance Brokers, Reinsurance Solutions, Strategies Insurance, Metro Life Assurance, Malembe Insurance, Grand Re, and Milmar Insurance Brokers.
Tanzania Reinsurance Company Limited, TanRe, was established in the year 2001 and started operations in the year 2004. Domiciled in the city of Dar es Salaam, the haven of peace, TanRe has become a dependable security in the local market. aspiring to become one of the most profitable reinsurers in the continent by providing sustainable reinsurance capacity and security in its markets using dedicated staff and modern technology in the best interests of its customers, shareholders, and other stakeholders. Tan Re boasts of a dedicated team of 30 employees.
Our strength is the people we have. We have a team which clearly understands what is expected from them. Speaking to the team is like talking to an individual. We all speak the same language.
Offering unparalleled services coupled with strategically selected brokers across the continent has made Tan Re a household name in the continent and beyond.
We have a presence in 235 companies in 49 markets in Africa, Middle East, and South Asia, offering tailor-made solutions to the various needs of our clients, ranging from risk survey, technical trainings, depending on the various needs of our clients and the market.
To address the issue of skills gap executive practitioners, Tan Re aside a sizable budget for local training.
Since the year 2017, Tan Re has been offering scholarships to 5 Tanzanians working in various local insurance companies to attend a 3-week intensive underwriting program in Pune, India. On top of that, Tan Re has been 45 Tanzanian individuals to attend online training in insurance and reinsurance offered by London School of Insurance.
In recognition of the support offered by the local insurance market,
Tan Re has a dedicated team of underwriters specifically designated to serve the needs of the local market.
A dedicated team of underwriters is always ready to ensure we have tailor-made solutions to suit the needs of our clients.
Prompt settlement of claims has made Tan Re distinguish itself from the rest.
Our internal business processes ensures that claims are settled within 5 working days.
Timely claims payment and settlement is crucial for client satisfaction and value.
Having a designated operating account has ensured that Tan Re prides itself in settling claims within a turnaround time of 2 working days, in line with the quality management system that is certified under ISO 9001:2015.
To allow the ease of penetration in some market segments in the continent,
teaming up with a pension fund in the Kingdom of Eswatini, we have set up a sister company known as Ezureni Re.
The future looks bright for Tan Re.
The future belongs to those who are adequately prepared. We have equipped our most valuable assets with the necessary skills to cope with the ever-changing business environment.
Tan Re, reinsurance at its best.
We move on to our next session, and I'm excited to introduce a gentleman. His name is Mr. Evans Muga Rabanga. He will be speaking about the dynamics of agriculture reinsurance market. A bit about Mr. Evans. Well, he is the head of agriculture underwriting at Continental Re PLC. He has over 8 years experience in agriculture insurance underwriting and is currently heading the division within the Continental Re. We're looking forward to hearing what he has to say about the reinsurance market. It's quite key when it comes to how agriculture insurance does work and getting the acceptance from the underwriters to be able to proceed with the products and solutions.
Good morning or good afternoon, ladies and gentlemen, watching me from wherever you are. When we're talking about agriculture, I always like to start by just highlighting on how important agriculture is. As you can see, this is a man I always admire. Akinwumi Adesina is the current president of Africa Development Bank. You can see what he says, that Africa by 2030 will fully rely on agriculture. So this is the sector to be. If you want to invest, look no further, go into agriculture, because we won't eat oil, we won't feed from minerals, but we will have to eat from agriculture. When we talk in agriculture, there are so many risks that the agriculture sector is facing. The natural risks that we will be talking about here are what we are familiar with, like hail, drought, frost, storm, fire, name them. But then there are also some other risks that come as a result of our social behaviors like accidental fire, theft and burglary, civil strikes, our political African scenarios, how it is. We have war, we have moral hazards, name them. But economically, we also have price fluctuations due to various reasons. There are market depressions and expansions, loss of income and all that. But then when you look at agriculture, we can't give solution to all these others, or rather if they are there, then they are not under agriculture insurance. But then what we tend to concentrate on is the natural risks, the ones in this box here. So we talk about hail, frost, drought, and for you to understand what I'm trying to say better is, look at this farm. This is a nice maize farm, probably somewhere in Morogoro, because we're talking about Tanzania today. So what can happen to this maize farm? The drought can come. It will be too hot for crop to survive. Pests and diseases can happen. This crop can be swept by flood. This crop can suffer hail at any point of the growth. So because of all these risks around the farm, especially as a result of what we're witnessing now, the climate change and related issues, it's a clear thought that agriculture insurance will be a sure way to help farmers circumvent these shocks. So agriculture insurance basically provides financial protection to farmers against production uncertainties arising mainly out of these natural factors that are beyond their control. So when talking about agriculture insurance, it's good to take you through how the products are modeled or how the products are classified. Under classification, we classify agriculture insurance in two broad ways based on how they are being indemnified. Indemnity simply means claim payout. The first classification is where indemnity is based on the degree of loss as assessed by human being. There is no machine intervention. So like a case where an assessor goes on the ground, sees what has happened and quantify the loss manually. That's how I would put it. Under these, then again, we have so many products. From my list, I'll go from top. There is what we call named peril crop insurance. This is a situation where, because a farmer knows what affects them, what they are likely to loss they are likely to suffer, so they are given insurance against that. For example, I'm growing my maize and I know where I am, I'm normally suffering hail. So I can only pick hail and be covered for hail. I can pick 1, 2, or 3, but not many. So that is how named peril is done. Besides that, you can see immediately after that we're talking about multi-peril. When these crops are growing, they are exposed to all sorts of risks. And if a farmer wants a situation where they don't know what is likely to affect the farm, then they go for what we call multi-peril crop insurance. In this case, all sorts of risks are put together in one policy, and so they are covered against any of those risks that would happen. You remember when we talked about that nice maize farm and a number of exposures that can affect that farm at any particular time along the growth. So that is how multi-peril crop insurance works. Another good product, I'm sure we're all familiar with greenhouse farm productions. Greenhouse is simply a house with a polythene on it that covers the crop during production. So some people call it hydroponic insurance, but I like keeping it easy. So when I say greenhouse insurance or I say hydroponic insurance, we simply mean the same thing. So these greenhouses are very expensive structures that you can't have them and you don't have cover in place. This is because they are exposed to high winds, different weather parameters that would affect them. And because farmers invest, they need to be covered. But what you need to remember here is that wherever you have a greenhouse, there is crop growing inside it. So in this case, we give cover for the crop, we give cover for the structure, and there are also other support structures around a greenhouse, like a water tank, pipes, pumps, so all those are covered in this. It's basically a property class of cover, but then modified to take care of other agronomy aspects around the greenhouse. I know when we get time one-on-one, then I can take you through these products in details. For now, I'm just trying to give a brief synopsis of how the products are and what they do. The next there you can see forest, fruit tree and orchard insurance. This is where we have sometimes we call it plantation cover. So these are crops that are not short term. If you look at a crop like maize, it only grows for 4 months. Wheat, 4 months. Rice, 4 months. So these tend to be seasonal covers. But then we have crops that are perennial, crops that take more than a year to grow. Like I know now we are in the season, in the era where avocado is the big thing. So a crop like avocado, you will not insure as maize. So these are where we look at crops that have commercial value but are grown for long term, like tea, sisal, coffee, cocoa, and name them. So this is a product that is structured. We look at either the establishment cost or annual maintenance cost of the farm or of the trees, or we look at what does this tree give on an annual basis. What are the harvests that you get from this tree? So that's what forms the basis of sum insured. I had to explain that. The other products, I didn't explain the sum insured because of time, but then the sum insured in any crop is based on what you anticipate to get from it. What is very important, and I have to mention before I go into livestock products, is that wherever we get these sum insured, it has to make sense. So under agriculture insurance, to safeguard us as insurers, then there is what we call guarantee levels. So probably you're growing your maize and you feel per acre you get 9-12 bags per acre. But me as an insurer, I'm not in your farm. I'm trying to manage my moral hazard. So I will impose some level of guarantee on what you say. What is key important again in this aspect is data. Is your data right? Is your data valid? So those are some of the issues that we really need to know as we go on cover. Under indemnity or conventional class of insurance, we also have a number of livestock insurance products. So I just put them in red to differentiate. We have what we call single animal insurance. So single animal insurance looks at those high value or high pedigree animals like dairy cows, like dairy goats, and name them, and pigs, those who do breeding, So these animals are insured based on the value agreed as ascertained by a vet doctor. That forms their sum insured. I'll not talk about rates, sorry guys, today, because it's not about rates, it's about just enlightening you. Another good product that we also offer the market is aquaculture. Aquaculture basically means fish and water life products. So this is just fish cover. Under fish cover, there are fish that are grown in the ponds, there are fish that are grown in the cages. So all products are put under aquaculture. We also have a cover for dogs and pets. Yes, someone will ask, when do we consider it a dog and when do we consider it a pet? A dog is a dog when it's used for, based on what it's used for. So dogs used for security, dogs used for sniffer dogs, those can be insured under dog. But then the dogs that you just keep for aesthetic value, then they become pet. So we have a product that takes care of that. And then I know we all aware of poultry insurance. Poultry is where we cover the birds. It could be for eggs, for aesthetic value, for meat, you know. So the products are all aligned under that. And lastly, when we're talking about bloodstock, it's almost similar, single animal cover, but bloodstock simply means horse insurance. So those are just a brief on products under indemnity-based insurance. I'll explain further when we get to meet one-on-one, or you can reach us out to get more on how those products work and they're detailed on their features. Another way of classifying agriculture insurance products is through how we indemnify, and in this case now we don't use human intervention, but then we use machine. So parametric or index-based insurance, this is where payout or claims are determined based on a measured index that is assumed to approximate the actual losses. It simply means we use a machine here. And machine can either be a satellite, can be a weather station put on ground, or can be maybe pictures taken over a period of time. Then they are analyzed, and some have been already configured or to do the arithmetic. For example, for it to go in easily is automated weather station picks everyday weather happenings and sends it to a server. So this server analyzes what comes weather-wise and relate it or correlate it to what that crop requires, and then it's able to compute whether there is a loss or not. It's a bit of science. The same applies to satellite. Satellites up there pick images, pick what is happening on ground, and sends it to a server. Then the server compares what is picked on ground versus what that crop requires, and then it's able to tell whether there is a loss or not. So basically, that is how we classify the two. So under the parametric weather insurance, I was only able to put 3 products. This is area yield index insurance. This is where we look at farms, many farms in the same region growing same crop. Scientifically, we call it homogeneous farms with homogeneous crops. You get it? Then we also have weather index insurance, which I've just explained, where a crop is growing, and then we monitor where it's growing through satellite or through automated weather station. Other products also include remote sensing index, where we're talking about NDVI, whether we're talking about vegetative leaf index, vegetative health index, where we're talking about soil moisture index, and things like that. A bit of science. When we're talking about parametric or index-based insurance products, it's more inclined towards science. And as I will explain a little later, is that these are details that we really need to teach people. We really need to capacity build, so then people get to the level where we are. When I'm talking about this, then they should be able to understand. But because parametrics is a new way of doing things, people are yet to get to read, then we get there by steps. And for this to happen, we've thought it wise to have a hybrid of the two, where we give cover based on indemnity, but monitor it remotely. So then farmers who are involved are able to see, yes, we were on ground to determine results, but then at the same time, we show them that, yes, we came to see, we saw this, but look, the machine was giving this. So then they are able to understand and they are able to accept the results. So then over time, we transition from indemnity to parametric based products, because I didn't mention that indemnity is quite expensive, quite involving. Imagine we insurers are mostly in towns and farmers are deep in the rural. Getting to this rural, in Africa we have poor roads, we have poor telephone networks, so it's a bit expensive sending someone there to do inspection, while we know machines can do it, so we rather have a satellite monitor it on us or automated weather station. So over time, to make premiums cheap, we are resorting to go parametric way. It's a stepwise, so I believe we'll get there. I overdulge on that, and by that I believe I've covered a bit of this slide. On this slide, I was just trying to compare conventional versus parametric insurance, the features that are there on parametric and the features that are there on conventional, and how they compare. But basically, if you look at the two, it's like comparing traditional ways of doing things and modern ways of doing things. And the key thing that I would love to highlight very fast is that conventional is expensive while parametric is cheap. Indemnity-based insurance is a bit difficult in claims and analysis and all that, while parametric, it's a bit straightforward when we analyze claims. So that means payout period is faster when dealing with parametric compared to conventional. The advantages are very clear. So then if at any point, once you get to understand how these products works, you will definitely go for parametric, but then we leave that for another day. To get to understand some of these products, because this video is being made, then you can always repeat, zoom in and read through. I went ahead, I pulled a data from World Bank that is trying to explain the key products that exist under agriculture insurance. And in this slide, you will see that we have area yield index insurance, we have weather index insurance, we have multi-peril insurance, and lastly, we have named peril insurance. So we're just trying to pick these two products, named peril and multi-peril as traditional insurance, and comparing them with weather index and area yield as index insurance. So this is for you to read when you have time, and feel free to reach us to explain further. When talking about which I'm somehow blocking with my photo, I don't know how, with my video, I don't know how that will come. But the thing is, currently, world premium is at 35 USD billions. That is as per 2021 figures. But if you look at the world, you will realize that most countries are yet to go parametric way. Actually, parametric is still very small. You can see the blue bit, the dark blue bit, while most of the countries are still doing the traditional way. Another key thing to note is that, yes, insurance started from the United States in early 18 something, to those who read history. But then in the last 5 years, the Asia and Pacific have really caught up with the world. So they currently share at 41% portion of what production of insurance premium. Brazil and the Southern America is at 4%, while Europe is at 13%. But then what is key in this slide is that out of 35 USD billion shillings, Africa is at 0.5 billion, just 1% of the world production. There is something wrong there, right? Yes, so that's why we're trying to come out strong as Continental Re and with my fellows in the industry to try put Africa somewhere. We have huge potential, in fact, huge untapped potential. So allow me again take you through Africa. As you can see, the premium is just 500 million, while the rest of the world is at 35 billion. So we're lagging behind. But look at it. Where is this $500 million coming from? This $500 million, almost half of it is coming from the South Africa, while the rest of Africa is a little bit scanty. Kenya, Nigeria, Sudan, Uganda, Zambia are trying, so they have little more in terms of premium. But then Zambia and Morocco is a little higher than Kenya and Nigeria and Tanzania. So a lot needs to be done in terms of premium production. If you look at that map, bigger part of the map is light gray, means no data. So even modeling a product where you can't have raw data to help model a product is a problem. So a lot needs to be done in that line. In terms of available lines of business, most of Africa we do both crop and livestock insurance, and then there is a little bit of greenhouse insurance, which was also in Kenya, but since horticultural production moved to Ethiopia, so Ethiopia seems to be doing more greenhouse covers than Kenya. But then, in a nutshell, Africa is dominated by both crop and livestock products. In terms of predominant products, you can see it's all indemnity based. It's all traditional insurance in most markets, but then some markets like Kenya, South Africa, Zambia, at least we've set a pace by doing a bit of index-based insurance, and in this case, predominantly it's area yield index insurance. We'll discuss these products in another day. So today I'm just giving a little bit of everything here and there. So to help us bridge this gap, I thought it wise to take you through again what are these challenges and how can we go about them. So challenge number one is lack of financial capacity and appetite for agricultural risks. Yes, most insurers perceive agriculture to be very risky, so they don't offer agriculture insurance solutions. The same goes to banks that we expect to finance these farmers so that they can get input, so that they can see their farming as business are shying away. So I feel we need to change this perception. We need to look at agriculture as a source of income, because we can't have our continent rely on agriculture at, I think the statistics has it at 60 or 65% reliance on agriculture, while we don't give finance support to this sector, we don't give insurance support to this sector. So these are the things we need to do. Another challenge is there are few technical experts in this market. I remember the other day we were trying to get an underwriter in some markets, and it's a struggle. So we really need to get out there, encourage guys to come on board, understand this technical subject area, and be professionals in this line. And by having more experts in the field, then we'll be able to explain these at grassroots level, and by then the farmers will understand, and insurance uptake will increase. In some markets, we've had cover limitations in that probably farmers want this covered and that covered, but then you're not able to offer it because mostly they lack data. If you don't have data, then you're not able to model a solution around it. So these cover limitations is a factor again. We're talking about cover limitations. You find they are producing, yes, but then what they want covered is something that you cannot model for. For example, I know in western side of this world, in US, they cover price fluctuations. Here in Kenya, and the rest of Africa, our case is so volatile that it's a challenge to model for that. And if you do, then you're likely to get exposed in terms of moral hazards, selective insurance, and all that. Another challenge that we face is that there are few players in the industry. I think I touched that with few technical experts. So I'll go to the next, which is lack of reliable and accurate data. This is for both meteorological, because we're talking about agriculture and weather goes together, but also the production data. Most of our farmers just farm. They don't even keep records of what they produce, how the season was, what were the challenges. So without some of this data, then you really can't model for it. And sometimes this is what put us to put guarantee levels like I had put in the previous slide. But then if you look at those guarantee levels, sometimes they look exorbitant and a bit discouraging for these farmers to take, but simply because we're also watching our back, as they would want to watch their back in terms of production. And lastly, and this is very key, is the limited awareness of agriculture insurance products and understanding of the subject area by our farmers. Our farmers are very good. They are really willing to insure. They are really willing to safeguard their production, but then they don't understand how insurance works. So I would just encourage for you to be here watching this video today. Probably you are more informed than the farmer out there. Get this information and feel free to share it. If you share, the farmers understand, and then we'll bridge the gap. In any project under agriculture, where agriculture insurance is, there are many partners. I will not go through the partners, but then the key thing, we all understand the structure of insurance. We have intermediaries, we have insurance company, we have reinsurance, we have retros, So this is something I would not go in for. Looking at time, I know time is gone, but then allow me to wind by just telling you about what we do at Continental Re. At Continental Re, we've taken it a mandate amongst us to make sure that we preach this gospel and make sure that agriculture insurance penetration increases from the 1% we are seeing to at least 5%. I know it's difficult to catch up with the rest of the world, but together we can push it. So at Continental Re, we work very close with aggregators, we work very close with the direct farmers, governments, like in Nigeria we have big schemes under government support. In Kenya we have big schemes under government support. In Zambia we have big schemes under government support. And even in Tanzania, something is cooking. So together, if we do this, we'll help bridge this gap. And we also have various insurance companies as our partners across Africa who work close with the brokers, and we have very strong retro partners giving us support. Products-wise, we give all the products as I had mentioned, but then we also have, or we do arrange treaties besides doing facultative. And lastly, because I was just mandated to give a little bit information of what's happening across the reinsurance market, I thought it wise to give at least some more of our players in the industry. So I'm from Continental Re, and I know Africa Re also is big in this space, offering agriculture reinsurance support and solutions. Allianz Re is there in the space. SCORI has been supporting us in Africa as well. Or we all know Swiss Re has played a big role in African agriculture insurance landscape, and of course Zebri as well. So for now, those are what I had for you. I'm available through my contacts as Ali shared. We can always revisit this, discuss any questions, any issues that you have. Feel welcome, we'll serve you. Thank you very much, and enjoy this day. It's Insurance Day of Tanzania. Thank you.
Welcome back on the session. Please remember that we're live on YouTube, Facebook, and LinkedIn. Hashtag Tanzania Insurance Convention 2021. Please don't forget to post your comments and questions. We are listening and responding to you live. Stay tuned. We'll be right back in 3 minutes after a commercial break. Thank you.
This conference is officially sponsored by Rochester Reinsurance and Tanzania Reinsurance Company, and co-sponsored by Association of Tanzania Insurers and Continental Reinsurance. Our gold sponsors for the event are Alliance Insurance, Sanlam Insurance, Meticulous General Insurance Company, Bharat Reinsurance Brokers, Howden Puri Insurance Brokers, Jubilee Insurance, NBC Bank and Zanzibar Insurance Corporation. Our silver sponsors for the event are Tanz India Assurance, Reliance Insurance, Mayfair Insurance, CRDB Bank, MGen Tanzania Insurance, Assemble Insurance, Smart Policy Insurance Platform, Heritage Insurance, Score Insurance Brokers, Demeter Insurance Brokers, Reinsurance Solutions, Strategies Insurance, Metro Life Assurance, Malembe Insurance, Grand Re, and Milmar Insurance Brokers.
We are a reinsurance company. We play the dual role of providing risk underwriting capacity and also reinsurance services, connecting global capacity to local risk. We offer reinsurance services across the full range of life and non-life business classes. Today we write business in more than 50 countries and have a customer base of over 200 insurance and reinsurance brokers. Our vision is to be the premier Pan-African reinsurer. It is a vision that is informed by over 30 years of growth and profitability. One of the most enduring notions of strategy is narrowing your focus. It's encapsulated in the English idiom, one must not spread oneself too thinly. In Africa, it is captured in a Nigerian saying, a man does not wander far from where his corn is roasting. We are Africa-focused. Yes, we are a Nigerian icon and champion, but we are now acknowledged as a Southern African, East African, Francophone African, West African, and North African reinsurance brand. We are now an African icon. Our core values are commitment, responsiveness, sustainability, and trust. The future is exciting for Continental Re. We have a clear, well-defined strategy that focuses on 4 strategic elements. Number 1, driving for profitable growth. Number 2, championing customer centricity. Number 3, offering alternative solutions. And number 4, executing smartly. We are an acknowledged torchbearer of the industry, and we will keep pushing boundaries, leading the way by offering unique solutions. The answer to the most pressing challenges will always be your talent base. We are people-focused and will do whatever must be done to remodel and re-energize our workforce to be adaptable so that they can build the momentum needed for business sustainability. For us, Africa is home. It is vast. It is diverse. We are 54 countries in one. We are an eclectic tapestry of nationalities, political systems, ethnic groups, races, religions, cultures, and languages. We celebrate the diversity of our team. Besides being insurers, engineers, accountants, actuaries, lawyers, agronomists, marketers, etc., we are a gender balanced family that embraces the common value system. And we are passionate about what.
Welcome back. We're moving on. Sad that my co-host has run away to the big stage. The next topic on the agenda is a panel discussion on setting the and super boost agriculture. And to be more, allow me, Kemi Insurance Human Protection Consultant. Her career spans over 20 years as a senior manager within 2 insurance companies, as executive and principal officer within 2 insurance agencies. Ms. Kemi Barrow has experience in bank assurance, general insurance, health insurance, and life insurance and microinsurance. In terms of qualifications, Kemi Barrow has a Bachelor of Business Administration, licentiate in insurance, and has attended specialized insurance and management related courses throughout her career. Kemi Barrow is passionate about insurance and ensuring that no one is left behind when it comes to the mitigation of risk. A big round of applause for Kemi Barrow. Kemi Barrow on the stage, please.
Good morning. We're about to begin our third panel, and it's an exciting panel. We'll be talking about regulation in Tanzania. And with me today, I'm quite happy to have two distinguished gentlemen, and I'll take this opportunity to introduce them. First gentleman is Mr. Israel Kamuzora, and he is the retired Commissioner of Insurance and Chief Executive at the TIRA, Tanzania Insurance Regulatory Authority, and he's been in the industry for over 40 years, so there'll be lots of nuggets of knowledge that we'll be able to get from this session. He currently holds a master's degree in international business and is a fellow of both the CII and IISA. Prior to joining TIRA, he was with the National Insurance Corporation, and he served as a part-time senior advisor for the Insurance Market Development Program currently, and for the African Development Bank. He has vast experience in underwriting, claims management, marketing, insurance regulations, and supervision. He's also served in various boards as president and chairman in Africa, and currently he is the chairman of Tapex Reinsurance Brokers Limited, based here in Tanzania. Welcome, Mr. Kamuzora.
Thank you for having me here.
On my immediate left is our current Commissioner of Insurance, Dr. Musa Juma, and he has been the Commissioner of Insurance at the Tanzania Insurance Regulatory Authority since 2019. Previous to that, he was a lecturer at the Institute of Finance Management, and his areas of expertise and specialization include risk analysis and measurement, actuarial analysis and modeling, actuarial evaluation, and insurance underwriting. Commissioner Musa, welcome to the panel.
Thank you very much.
Audience would be interested to know what is happening in Tanzania in the regulation space and what exactly is happening in terms of agriculture insurance. And be interesting to share some immediate facts and figures with you for you to get a oversight and understanding. So, agriculture in Tanzania contributes to about 30% of the gross domestic product. And currently about 70% of the population are farmers, and 77% are actually employed in the agricultural sector. When we look at the total exports, it's about 65%. And our main products and produce, maize, cotton, coffee. Other value chains include wheat, barley, paddy, sunflower, sugarcane, rice, beans, pyrethrum, and tobacco. And why is that important? It sets the foundation to know how important agriculture is here, but also it takes us through to the agriculture insurance aspect. And what's important for us to know, and what we'll be looking at when we talk about agriculture insurance in this particular discussion, we'll be keeping it broad in terms of crop insurance, livestock insurance, but also extending it to horticulture, also looking at aquaculture insurance, and even pastoral and forestry. So the scope of our discussions will be based around that space. So with that, I think we can look at the questions that we'd have in mind. I'll pose the first question to Commissioner Musa.
Yes, please.
Yes. Commissioner Musa, we hear a lot about agriculture insurance in Tanzania, a lot. And over the last, I'd say, 15 years or so, there have been lots of initiatives that have happened, but we've still not seen traction in terms of the number of insurers who are actually offering insurance solutions, in terms of the solutions regarding agriculture insurance, and is there a focus more on cash crops? How about the peasant farmer? How are they able to be protected in terms of their risks being covered and mitigated? So what exactly is happening? Is Tanzania looking at pushing this agenda for agriculture insurance? Is this something that is a priority? Or is it 10th on the list? Where does it fall, Commissioner? Let us know. Are there efforts in place?
Thank you very much, Madam Moderator. As a regulator, we know that agricultural insurance, or agriculture specifically, employs a huge earnings, and again, it contributes 30% of the GDP. And in agriculture, there are a lot of subsectors of crop insurance. Crop farming. We have livestock farming. There are fisheries, forestry, and all these, they employ a huge number of Tanzanians in those activities. Now, there are a lot of challenges when it comes to offering agriculture insurance in those fields. First of all, we need to know that there is what we call value chain regarding with the agriculture. So we have many people doing various activities within the agricultural sector, starting with the producers of the crops, so those who are involved in rearing livestock, those who are involved in doing fishing. We have those who are providing inputs for those producers. Then after the products have been harvested, then we have storage before reaching to the market. So there are many people who are involved at every stage. And when it comes to insurance, we need to find a way of making sure that at every stage in the value chain, we cover the risks which are associated with. Now, due to the nature and the complexity of the agricultural sector, there are a lot of risks, including administration when it comes to offering insurance. Insurance companies need to employ people, and therefore they have to pay some salaries and wages. There are assessment costs, there are marketing costs. All these need to be paid by the insurance companies when they want to offer such kind of products. Now, when it comes to determining the premium should take into account all those costs. Now, actuarial premium, which have to be paid by these farmers, you find that the ability or the affordability of these farmers might be a bit difficult. Now, because of that, the regulator, under the Ministry of Finance, or generally the government, found that in order for the agricultural insurance to be feasible, there is a need of having a strategy, national insurance strategy on agriculture and livestock. And this is started back around 2017, trying to come up with a strategy now which can work out on how to offer agricultural insurance. So there are many aspects or many stages which have been taken out by various stakeholders of this sector, and we expect by 2022 June to have that strategy in place. And therefore, having that strategy in place will provide a way of designing or coming up with the agricultural insurance regulations, which will now guide how this agricultural insurance can be or can proceed or can be offered. It will outline the roles of various stakeholders like the ministry or the government, the department agents, research institutes, higher learning institutions, and various associations in order to make sure that this agricultural insurance really contributes to the agricultural sector. So we have NARIS in place, National Agricultural Livestock Insurance Strategy or Scheme, which we expect by 2022 to be in place. We still have, or there are some few items, like 6 of them, which of course need some financing.
Luckily, TIRA has tried to organize and send out letters to development partners and other stakeholders to finance those remaining activities so that by the 2022, the scheme is ready. And once it's ready, we are sure that agricultural sector will improve and therefore agricultural insurance will make a difference. So that's what I can say with respect to Tanzania. We have that narrative in place, and we know that without having national strategy in place, it's going to be difficult to push this agricultural insurance. So we need that one in place first. Then we design agricultural insurance regulations. Then the regulations will lead to guidelines and checklists which will guide the proper implementation of agricultural insurance.
Thank you, Commissioner. Very comprehensive. And it's good to see that there are some good strides that are in place. And we're looking forward to seeing what 2022 has for the market, but most importantly, the farmers. Because essentially for them, their focus is on three main areas: increased income for them, increased jobs, but also welfare. How will this improve their lives and those of their families? So ultimately, that beneficiary is key as we discuss this. So as a follow-up, Commissioner Musa, we know about the Financial Sector Development Master Plan that is from 2020-2021 all the way to 2029-2030. So it's a 10-year plan spearheaded by the Ministry of Finance and Planning and covering the financial sector, which includes insurance. And there are set targets. Being from now till 2030, the insurance sector should be contributing, should have a penetration rate of 50%.
Yeah.
And if we go a bit deeper on agriculture insurance is required to contribute about 10%. 10% of the total penetration needs to come from agriculture. So that is a big leap. And if we look at immediate targets, we have from next year, there should be a 2% penetration increase. In 2025, another 5% increase. And 2030, we should be at the 10%, which is very ambitious. So I think this question is twofold. On the macro side, how do the strides that TIRA is making complement, or how are they aligned to these targets? And then definitely a follow-up question for Mr. Kamuzora, being on the micro space in terms of demand supply. You're dealing with customers as a reinsurance broker. You understand what their needs are. I would like to hear from you, because one of the important aspects is that all insurers, it says within the Financial Sector Development Master Plan that all insurers who are able to, or in the general space, are required to come up with one new solution every year. So would like to hear on that. Commissioner, maybe you could start us off on that alignment. How does the work of the NALIS link with the Financial Sector Development Master Plan?
Yeah, thank you very much. As a regulator and the market in general, we are guided by the master plan of 10 years. And again, we have the 5-year development plan. They have set some targets to be achieved within 5 years and within 10 years. From that plan, we develop what we call action plan. Each year, we set some targets of those objectives from the master plan and the 5-year development plan. As you say, we have a target of reaching 2% from agricultural insurance, the premium as a percentage of the total premium. Now, we understand that in the insurance market, not every insurance company can do everything. What I mean is, we don't expect all insurance companies, 31 insurance companies, each company to do agricultural insurance. So currently we have like 5 insurance companies which are dealing with agriculture. So we expect 5 which have already gained some experience in the products they offer. So it's like the 2% we expect the 5 insurance companies, and the other will be interested to join. Make sure that they come up with good products, demand driven. Yes. So according to their capital and their plan, they do research and they collaborate with other government organizations to make sure that they get sufficient data of the people, of the needs of the people, of the risks, so that they can design the demand-driven insurance products for a particular segment of the population. So we expect those 5 and those who will be interested to generate that 2% of the total premium by within the set target of 1 year or 2 years. And therefore, we don't expect all 31 insurance companies to enter into agricultural insurance and say that now we need every insurance company to come up with agricultural insurance product. That will not be possible. So I think we have already started the market according to their capacity and according to the appetite and the technical assistance which they have or which they need to get from the foreign countries. Good enough is there are other companies which have tried to have some experts from abroad, India and maybe Malaysia and wherever. So once they seek work permits, showing that these people have expertise in agriculture, then TIRA will assist to fast track to offer no objection so that we can have those experts who can come up and help the country to design the products for our people. So that's what I can say for now.
Okay, thank you, Commissioner. It's comprehensive and it looks like all is on track, and I believe there's partnerships in place for this.
Obviously.
Okay, excellent. Mr. Kambusora, from a market perspective and also bringing on your valuable experience in relation to suppliers, customers, and currently now in terms of the role that your organization is also taking, what are your immediate thoughts about the business case for agriculture? How do you believe that adds value? Is it something that's feasible for the insurance companies? How can they position themselves? But also, what do you envision as some of the obstacles that they need to address to be able to develop solutions in this market?
Yeah, I think it all depends on the approach that the government takes. And the reason why I'm starting with the government is because in all markets in the world where agriculture insurance has been developed, it is the initiative that was taken by the government in collaboration with the market. So that's why I'm starting with the government. The government has to come in a big way to work with the private, market, and under the partnership between the government and the private sector, we can build an agricultural insurance industry in Tanzania that will be robust like it is in other, countries. And why do I start with government? I start with government because the government has to come up with what we call the National Agricultural Insurance Scheme. I'm glad the Commissioner has talked about the NALIS. If that is the one, then that's the right approach. That should be a scheme that the government owns, and it has to be driven by both the government and the private sector. The government is coming in because he said it right, and his background is on risk analysis and modeling and actuarial studies. He said it rightly that the agriculture insurance risk is not a normal insurance risk that we know of in many classes because of the uncertainty that is there, and because of the varied risks that agriculture insurance poses to the industry. Many insurance companies will always be reluctant to enter into that field of business, because it's like, the loss is setting. If there is a drought, you'll have claims all over the area, and that can be dangerous for the industry. So the government normally comes in either to subsidize on the part of the premiums, which are very high. If you do actuarial underwriting in the agriculture side, you end up, putting the premium at 20% of the sum insured. Which farmer can pay a premium of 20% of the sum insured? But the government will always come in to subsidize the premiums so that the farmers can afford. So it's an issue for affordability, but as well as an issue of making it, you talked about business case, making it affordable, but also making it easy to roll out to many customers, because it will be attractive if the premiums will be subsidized by the government. So the government has to come up in its national budget each year, for instance, to set aside funds to say we want to assist in the development of the agricultural insurance sector in this country. And in the national budget, the Minister of Finance will have to come up every year to say, I've set aside a certain amount of billions of shillings to be able to give this money to any farmer that goes into farming and pay for him, this kind of premium. And when we are talking of doubling the penetration rate by or rather each year, through agricultural insurance, it is possible.
Excellent.
It is possible because countries like India and China, who have had the government coming in to support the agricultural insurance in subsidizing the premiums at the level of 50%, they have been able to double their penetration rates within 10 years. Of course, within 10 years. That's when you double the penetration. You cannot double the penetration rate within 2 years. Within 10 years, that's when you can double your penetration rate. So when we are talking about increasing the penetration rate, maybe at most we can go to 3% in 10 years. We'll have to use the agricultural route. Otherwise, these other routes, it's impossible. And many countries that have used that route, like China, I'm talking about, 10 years ago, their penetration rate was less than 2%. Now it is above 6%. They have managed to do that because of the agriculture insurance. So agriculture insurance is important in terms of developing the industry. And as I'm saying, the government has got to come in with the private sector to work together. If the private sector goes it alone to say they are forming a pool, those 5 companies as mentioned, if they say they are going to do it alone to form a pool, yes, they can form a pool, but will the premiums be affordable? They still need the government.
It's required.
Yeah.
It is required. Thank you, Mr. Kamazura. Very good insights from the customer side. Of course, different markets with different value chains, but some of these experiences are so relevant and can be borrowed in some ways and picked up. I think, Commissioner, in terms of the action plans, it's something to look at. So, Mr. Kamazura, I'd like to continue to ask you, in terms of possible models that can complement or can work together with agriculture insurance in terms of farming areas, are there some that come to mind, and what kind of innovations do you believe could be able to complement the possible uptake of agriculture insurance in this market, also with alignment in terms of types of value chains, types of crops, or nature of farmers?
Yeah, maybe taking an example of our neighbors.
Yes.
Starting with Uganda, our next door neighbor. Them have gone for a pool.
Yes.
That's the model they have chosen. But the government has come in a big way to subsidize the premium up to 50% in Uganda. So farmers are taking agriculture insurance because the government is subsidizing the premium. When you go to countries like Kenya, it is still purely private. the government hasn't come in to subsidize the premium. But the scale is still very low. And you know, Kenya started many years ago. Even before we thought about it, they started with Syngenta, with all these other foundations you heard of. But the scale is still very low because there's no way that the private sector can go it alone. If you go to Malawi and Zambia, it is private, but there is contract farming. Contract farming is another form of farming whereby a farmer goes to farm when he has already signed a contract with an off-taker, somebody who is ready to buy the crop, and who has already guaranteed the price of the crop. So the farmer goes to farm knowing that if I produce 60 bags of maize, each bag of maize will go at this price, and the price is guaranteed. And this off-taker who enters into a contract with the farmer gives the farmer the inputs, the seeds. He even gives, he even provides extensive, extension services to be able to oversee that the produce is there to come by. So in Malawi, the groundnut, there's a groundnut farming scheme, and Zambia, they have got the maize scheme, and these other crops. It is all purely contract farming. And I'm glad, actually, I was reading the paper last year, it was this year, I think, the Daily News. Honorable Bashe, the Deputy Minister for Finance, Minister of Agriculture, talked about contract farming from this year in Manyara, Singida, and Dodoma districts. He said all this farming in terms of the sunflower crop, it will be purely contract farming. Now, contract farming has one advantage when it comes to the insurance. But in contract farming, the investor, the gives the seeds, and who is ready to buy the crop, takes a loan from a bank to be able to do contract farming. He insures that loan. So the loan that the bank gives must be secured by insurance, agricultural insurance. So that way, you promote agricultural insurance in a country where there's contract farming. You're asking about models. I've talked about that model. Contract farming is another model that is very important in terms of building the robust agricultural insurance industry in any country. Now in Africa, if you go to Rwanda, they're also doing it. They're also agitating the government to come in to subsidize the premiums. So likewise here in Tanzania, I cannot see the private sector doing it alone. The government must come in. Otherwise, it will take years. Because we started talking since the year 2000. Yes. And there have been so many experiments. And the government has always been saying, this is a business case, this is a private issue. The government doesn't want to come in. But I think it is high time now the government has to come in. Because we are not taking off the ground if the government is not coming in to support the farmers, with the subsidization of premiums, etc. So I think the role of the government key.
Thank you. And you brought up the issue of subsidies, which I know is sensitive but not sensitive because it's an urgent issue. And looking at other markets in terms of some of the subsidies that they have in premiums, in some rare cases even helping with the admin and operational costs, and even on the loss assessment side of things. Commissioner Musa, what are your thoughts regarding subsidies, or how else can government come in? And right now we are talking about setting the right regulations and supervisory standards. So as a regulator, what do you think needs to be done in that space?
Yeah, what I can say is maybe because I haven't clarified more on what NARIS, the composition or the contents. But once the NARIS draft is ready, it has a lot of information in it. So it is a kind of government-private partnership. It explains in detail what the government is supposed to do, what the private sector is supposed to do. what other development partners or stakeholders, their roles in agricultural sector. So it has a lot of issues which we expect when it is out, it will help to iron out a lot of issues or a lot of challenges or problems. A bit it is technical and it needs some financial support. And TIRA, we are in charge of making sure that we involve various stakeholders to make sure that the NARIS is completed and submitted to the Minister of Finance. Mind you, report, and therefore it takes. So the NARIS will be administered by the government, and there are various organs which are responsible for each and every aspect. And the TIRA, we are, as a regulator, we are there to make sure that we implement what is being explained in the NARIS report by coming up with the regulations, and therefore I'm sure that we'll be in a better position, because there is no way the government will be left out. So there are many issues which the government has to come in. So we have seen the issue of data. Yes. And then the issue of data, the NARIS draft will provide possibilities to the research institutes to make sure that they come up, they do a lot of research, and probably the government will help to fund those kind of research so that the data are available. Now, once the data are available, it is the duty of the insurance companies to their technical people, because they have the data, then they comprehend to come up with the right product to the right segment of the population. And there are various types of these agricultural insurance depending on various perspectives. For instance, indemnity-based and other index-based. Under what circumstance, to what category of group of people this product can be offered. So this technical team from the insurance company will come up with the right product to the right category of people. Now, once the actuarial premium has been determined, then the scheme will outline the portion the government should subsidize what percent. After they have established the premium, then they will ask the government how much of that premium should be subsidized in order for the product to be taken by the consumers. So it has a lot of issues which, when it is ready, I'm sure that it will help to revolutionize the industry.
I think Mr. Komsoro is interjecting here.
Yeah, maybe the structure that the government may need to use in order to properly administer the NARIS. In markets where they have a scheme like that one, and they have established what they call the National Insurance Agricultural Company. That is the one actually which administers a scheme like that one. If that would be the approach, then that would be right, because I don't expect TIRA to administer the NARIS. It's not the regulator's role. Yes. So neither do I, or rather, nor do I expect the Association of Insurers to administer the NARIS. They cannot. So if in that paper that you are talking about, the government is mounting an idea of coming up with an administration, or rather an administrative structure that will make sure that the premiums are subsidized, that those credits, agricultural credits, are insured compulsorily like it is in other markets, that there is the type of crops that do benefit the subsidy on the premiums and so forth, that the data is properly kept, and well analyzed, that there are researches that are being conducted, that, those are the kind of administrative issues we are talking about. Then there should be a national agricultural insurance company. Like they did in Nigeria, they have got a Nike. They did it in India, they have got a Nike. They did it in Brazil, they have got a Nike. In Mexico, they have got a Nike. You see? Those are the structures that we need to be put in place for the agricultural insurance industry to be able to take off very quickly. So I think, I don't know if the commissioner will let the industry to look at the analysis before it is made a policy a document. Because I think we need to put input into that paper.
Yeah, of course.
Yes.
I believe that should be there, isn't it?
Yeah.
So is it a multi-stakeholder initiative?
Of course. Among the issues which I've said that they are remaining, or once they have been fulfilled, then the draft will be ready. If I can mention briefly, we have feasibility study analysis.
Yes.
We have, after that, then the development of the national policy creation and subsidy issues. Then we have product development, pricing and distribution channel. And then we have stakeholders engagement, responsibility and process creation. So that's where once it is within the process that stakeholders need to be engaged. And of course, from the beginning, stakeholders are part and parcel, either providing technical support or financial support. And even for the remaining aspects, we have we have issued some letters to ask the stakeholders to fund in terms of technical and financial aspect to make sure that these remaining parts are being accomplished. And by June 2022, we expect to have a first draft. So it is 100% participation, because TIRA, we are just making sure we are leading, bringing in various stakeholders to make sure that the draft scheme is ready. So, and you can see that the draft also, or the scheme, provides roles and responsibilities of key stakeholders in the market. And that is the essence of having a scheme, so that everyone knows he has a responsibility to make sure that agricultural insurance kicks off. Without that one, it can be, or it's very difficult. You want to do this and you ask some information from another, maybe research institute. It becomes like a favor. It's like it's doing a favor. But if it is specifically written in a particular document, then it becomes a responsibility. It's not a favor, you have to. So there are many issues for that.
Something that comes to mind, we look at premium rates right now for agriculture insurance. And I did a snapshot of the market, and it ranges from about 1% all the way to about 18% in this market. So, Commissioner Musa, we're talking about regulation and supervisory standards. How, as a regulator, are you able to go in? Of course, there's a product approval process, looking at what the product looks like, but how do we make sure at the end of the day that pricing is not an aspect that overburdens the ultimate beneficiary, who's the farmer? Because currently this same farmer has credit, challenges with access to credit, and if they get it, it is expensive, access to credit. And in addition to that, they might be already a credit life insurance bundled with their loans. And then we now have agriculture insurance. So in addition to the subsidies that are there, which are very beneficial, how else are we able to push and move forward in terms of ensuring that pricing remains as affordable as possible, ensuring the products are relevant, affordable? And I'd request a quick answer to that, so that we can be looking at the next step in this particular panel.
Yeah, thank you for the good question. As we have said earlier, agricultural insurance for the supplier side, the insurance companies, they are interested to enter or to venture into the business if it is profitable. So they work out cost-benefit analysis. If it is profitable, that means the premium charge pays the claims and the expenses. If it does, then they can enter. But most farmers,
Yes.
if you work out the actuarial premium,
Yes.
not just if you, for instance, you want to make marketing to these farmers, the cost incurred by the insurance company. If you end up with the administration costs, you end up with a loss assessment, that loss has happened to a particular farmer, and before paying you need to go and make some assessment and to come up with the actual amount. The cost of doing those 3 or 4 aspects, apart from paying the claims which has happened, already is greater than even the premium which that farmer is able to pay. So without any assistance, as currently we are, without this scheme being in place, you find that very few insurance companies have appetite to enter into that business because of cost implication. So if we leave the business to the private case and the government is aside, don't expect miracles. And again, because it is not, you cannot force insurance companies to enter into that business. For what reason? There is no incentive for them. The cost of offering the product is greater than what they are likely to gain. So they incur a lot of cost doing research, determine the right product, and then there are a lot of administration costs and etc. So that's why we need some incentives, some mechanism to make sure that the cost is going down and they
There's
can.
also innovation, perhaps.
Yeah, innovation could be for the distribution channel. Probably currently we can use the MNOs, we can use cooperatives, so that we offer those products through their cooperatives. But again, we can use, good enough, the government has reduced some of the cost, has removed the VAT on crop insurance and livestock insurance, right? But that only is not sufficient enough to, because the cost is still big for these doing research, administration costs, loss assessment, marketing, and whatever. So still a big portion of cost is not yet met. But again, the government has done something, but it is still emphasizing that if you need some data, please, we can collaborate, use our institutes, use our organizations. We have higher institutions, we have students there, so we can use them to assist. But still, we need these NARIs to make sure that agricultural insurance contributes a lot. If we leave to the private sector, we don't expect miracles.
Thank you, Commissioner. So, as we're wrapping up this particular panel, I would be eager, I'm sure the audience would as well, to get your final remarks regarding what kind of steps need to be taken for the right regulations to be in place and also supervisory standards when it comes to agriculture insurance in Tanzania. So, Mr. Kamuzora, I wish to hear from you on that, your closing remarks very quickly. Can you let us know?
Yes, I think the supervisory standards could either be rules and regulations that are normally made by the regulator to be able to make sure that there is a level playing field in the market. And this can only be put in place after we have agreed on the kind of structure that the market is going to adopt. I'm glad the government is taking initiatives in the right direction of coming up with a scheme. And it is through that scheme one will be able to know whether the government is establishing a company that is responsible for promoting agriculture insurance in this country and also ensuring, certain crops and setting the standards now. I think if that will be the case, then the regulations that will come after that will be able to make sure that the company that is established is doing X, Y, Z in line with the Insurance Act that we have. The government can decide that way. It's not a dream. It's not a daydream, because in the financial sector, yes, right now in Tanzania, we've got an agricultural bank.
Yes,
when the commercial banks refused to give loans to farmers, the government decided to establish a Tanzania Agricultural Bank to be able to achieve that. So that when I'm talking about the government establishing a company to be able to do that, it's not a far-fetched dream, because we already have, a bank that doing the same.
Yes.
But if the structure will be that the private sector, it is the one that is driving agricultural insurance in this country, and the government is subsidizing the premiums, then there must be regulations to be able to make sure that those premiums are not put for a different use. If an insurance company gets the subsidy from the government, that money should be put into a special agricultural fund. That fund is invested in a particular manner, and that fund is used to pay out the claims. Of course, I would like to see the government also, if it goes that way, to come up with some incentives. That have decided to go into agricultural insurance, then they should get rebates on the tax rebates, not just VAT, but real tax rebates. And I would also wish to see that if the government chooses to go that way, whereby the private sector is driving the industry, then the government has also to provide what we call the stop-loss mechanisms. That if there is an insurer who has insured a big chunk of an agricultural risks in a year, yes, and that there was a drought and or a flood or something that the claims have poured in to damage the underwriting results of an insurer, then the government should come up to compensate that insurer to some extent. So these are the mechanisms. So the regulations will depend on which mechanisms actually we have chosen to adopt as an industry.
Thank you, Commissioner. Former Commissioner, Mr. Kamuzora, excuse me. Echoing on what you've mentioned, very powerful points in terms of how do we align in regulation and supervisory space. You spoke about the National Insurance Education, National Insurance Agriculture Company, looking at level playing fields, structures and models to adopt, looking at incentives, but also what happens in the case of catastrophes. How are insurance companies able to be assisted in how the government comes in?
Agricultural insurance is one part or is an adjunct of the broader risk management measures in agricultural sector. So there are a lot of aspects which need to be taken into account holistically, including the agricultural insurance. So we don't need, or it's not just to have agricultural insurance in place if other measures are dormant. And these measures implies it needs collaborative work between different partners in the agricultural sector, from those who are involved in the value chain and the ministries, various department heads, research institutes, higher learning institutions, various associations. We need to work together in order to make sure that we have a strong risk management measures towards agricultural sector. So very important to support technically and financially in order for the NARIS to be in place by 2022. Yes. After that, then we are likely to have the right regulations, right rules on track, and by so doing, we can now be sure that the agricultural sector or agricultural insurance is likely to improve significantly, and those targets of reaching 10% of the gross written premium by 2030 is really realistic. Otherwise, without that one, it can be difficult. So that's what I can say.
Thank you, Commissioner Musa. Valuable inputs, and we definitely are looking forward to seeing what will happen next. And I think as a nation, we have an opportunity to see how technology and innovation can take us forward, but also an opportunity not to wait until analysis is done, whoever is watching this from the market will be thinking, do I need to wait till 2022 to start developing solutions? But I think the opportunity is now. I believe so, Commissioner. The opportunity is now. If they have a ready market, they have solutions, I think it's coming to you and presenting that to your office and seeing how best that can be provided. And also how the sharing of information, big data, which is so valuable in terms of decision making, in terms of stakeholder buy-in, in terms of shareholder buy-in for those agencies to be able to that. But the consumer education aspect for the farmers to be able to know what exactly is out there for us. What opportunities, what ways can we be able to mitigate our farming and livelihood risks? Because a lot is already happening on the other space in terms of the health for the farmers, the initiatives in place, and even looking at the theft and other risks that need to be mitigated. So overall, I think Tanzania is very much on the right path. We've spoken to the right people here today on this panel in terms of what is happening, and there'll be, I'm sure, lots of initiatives that will be shared over the coming years in terms of the NALIS and the development of the agriculture insurance regulations. And we're looking forward to collaborations with other players in country and externally, but also sharing our experiences and lessons learned. Thank you very much for being with us, and please continue watching the additional panel sessions. Very exciting updates on agriculture insurance in the country. Thank you.
Kemi, welcome back. Thank you for accompanying me again.
It's good to be back, Benjamin.
Yes, so that was a very good conversation and a discussion from the two, most experienced, experts we have in the insurance. Did you pick anything common, discussed it from both of them?
Oh yes, it was very engaging, and I must say I picked up a lot. But there's some important takeaways that I think are so important for this market. And what came out very clearly is the fact that the National Agriculture and Livestock Insurance Scheme needs to be prioritized. Looking at 2022 as being the timeline, and that will be how we're able to move forward in terms of developing our regulations. But the other thing also, Benjamin, that I wish to add is the fact that insurers need to know that they should still consider and they are able to proceed with their products even now. It should be something that they wait for until another year from now or two. So I think we're on the right path, and the government support appears to be there. So we can envision lots of great things happening, and those will be in line with the Financial Sector Development Master Plan for 2029, 2030. So 10 years from now, I think we'll be saying something different about Tanzania.
Excellent, spot on. And these are the good things about these kinds of platforms, you see, because from a lot of literature shared, we have seen that agriculture insurance by 2030 should be contributing by 10%
exactly.
from the gross written premium in general.
Exactly.
Excellent.
Ambitious but achievable. The commissioner has promised that it's achievable.
Yeah, I could see the tone. Thank you so much. We're moving on. Please don't forget that we're live on YouTube, Facebook, and LinkedIn. Hashtag in the Insurance Conversion 2021. Please do not hesitate to put your questions or your comments. We'll be live responding to all your queries, your comments, and your questions. Thank you so much.
This conference is officially sponsored by Rochester Reinsurance and Tanzania Reinsurance Company, and co-sponsored by Association of Tanzania Insurers and Continental Reinsurance. Our gold sponsors for the event are Alliance Insurance, Sanlam Insurance, Meticulous General Insurance Company, Bharat Reinsurance Brokers, Howden Puri Insurance Brokers, Jubilee Insurance, NBC Bank and Zanzibar Insurance Corporation. Our silver sponsors for the event are Tanz India Assurance, Reliance Insurance, Mayfair Insurance, CRDB Bank, MGen Tanzania Insurance, Assemble Insurance, Smart Policy Insurance Platform, Heritage Insurance, Score Insurance Brokers, Demeter Insurance Brokers, Reinsurance Solutions, Strategies Insurance, Metro Life Assurance, Malembe Insurance, Grand Re, and Milmar Insurance Brokers.
That's okay, bye. Boss, look!
You can't prevent a disaster, but Jubilee can turn the clock. Thank God for Jubilee. What you can't prevent, Insure with Jubilee. Jubilee Insurance.
So Mr. Andrew Hoggart will be speaking about the art of data analytics, turning data into opportunities in agriculture insurance. We always wonder about big data, isn't it?
Yeah, you say data is the new soil.
Oh, it is for sure, because how do you take all of that and make sense of it? So I think he'll be talking to us about that. But a bit about him. Andrew is the senior insurance broker at Afro Asia Insurance Services, and he's been doing this since 2013. And his areas of business and focus include property, marine, cargo, political violence, terrorism, casualty, and even cryptocurrency. That's interesting.
Excellent.
So he also has experience in blockchain-based insurtech startup. So innovation is there, Benjamin. And he's passionate about cryptocurrencies and decentralizing ledger technologies. This is going to be an interesting session.
Very interesting.
For sure. Yes. So we welcome Andrew Hoggart to take us through.
Thank you so much.
Hello everyone, my name is Andrew Hoggart and I am a senior reinsurance broker at Afro Asian Insurance Services. Without further ado, let's get straight into it. This presentation is about turning data into opportunities in agricultural insurance through blockchain technology. So what can you expect out of this presentation? Well, I'll explain what blockchain is and how it works. I will also touch on certain applications in the agriculture insurance space. Lastly, I'll also explain the importance of having accurate data. Before we go any further, we need to make one thing clear. Bitcoin and blockchain are often used hand in hand, and the reason for this is because Bitcoin is built on blockchain, but blockchain has applications that can do things far more complicated than just sending value from one person to another. Therefore, blockchain is not an entity, it is not a brand, it is not a company. So what is it? Well, blockchain is a technology. I think everyone here, if you're listening right now, can agree with me that the internet has changed the way we communicate, the way we shop, or sometimes even the way we exercise. Well, blockchain has the potential to change entire industries, from the way we trade art, from the way we vote, and as we now know, it has the potential to send value from one person to another. So let's go into a little deeper what blockchain really is. Bitcoin is built on blockchain technology, but blockchain isn't necessarily Bitcoin. And in its most simplest and modest form, blockchain is basically a new record-keeping technology. Okay, so how is it new? Well, it's new in the sense that it is transparent, decentralized, and unchangeable. It is transparent in the sense that everyone that has access to the public blockchain can view their same records. It is decentralized in the sense that not one person or central power has governing control over the network. And it is unchangeable in the sense that anything that happens, so all the transactions that happen on the chain, are immutable, so they can't be changed. Okay, so how does the flow work exactly? Well, it starts off by someone sending a request to the network. So for example, if I'm sending money from my bank to another bank, instead of sending it to a bank, you send it to a network of computers. And each computer, or also known as nodes, they then validate this request. as soon as there's a consensus in the network, then a block is created with all of the information. So in the example where I would send money from one person to another, information such as the amount of money, the sender, the receiver, the date, etc., these are all things that will be stored as a transaction. Once this is done, the block is then created and joins a chain of other blocks, hence the word blockchain. Now the block then joins the chain forever and cannot be altered. So what's the point of all this? Well, it removes the need for any central reliable data points. It removes the need for unnecessary intermediaries. Now note, I say unnecessary intermediaries. Afro-Asian Insurance Services is an intermediary, and I can assure you will be around for a very long time. And it also allows for trustless behavior and transactions. So now that we have spoken about blockchain, there's one more thing that we need to understand, and that is smart contracts. Smart contracts essentially adds another layer of information. Now, a smart contract in its bare form is essentially an agreement written in computer code, and because it runs on the blockchain, the database is public and cannot be changed. The transactions that happen in a smart contract are processed by the blockchain, which means that they can be sent automatically without a third party, so they work on its own. So smart contracts essentially work on an if this then that statement. So for example, if I were to receive goods or services, and as soon as I've received them, I can confirm that I've received them and a payment would be executed. Now I know this particular example doesn't sound too revolutionary, but remember that the back end of this technology is done through a network of computers rather than one central authority. So what's the point of all this? Well, first of all, the system runs on its own, so it's autonomous. It is secure in the sense that the data is stored on various computers rather than one central authority. It's always accurate in the sense that there are no human errors after the computer code has been written. It is fast because everything, theoretically, is done automatically. And all of these points make this new technology cost-effective because it takes out unnecessary middlemen and it works autonomously. So how would one apply these types of technologies within the insurance industry? So smart contracts can stipulate the rules between two parties, but unlike physical contracts, so the pieces of paper that you can hold in your hand, the written code can also track insurance claims and hold parties in the chain accountable and updated in real time. Therefore, insurance policies could be written in code, whereby one party agrees to pay X in return for Y, should a particular event occur. So let's recap some of the stuff we discussed. We know now that blockchain is essentially a network of computers that all store and process the same records. We also know that smart contracts allow additional information to be added as a layer of further information on one of these blocks, with an if this then that statement. So if we look at one policy, for example, we can immediately see how many third parties can be connected to the value of one insurance contract. We could have a surveyor that may have conducted a survey that needs to be shared with the markets. We can also have a policyholder who has requested changes within the policy that needs to be agreed by the markets. Now these types of things can be done with the if this then that statement, so with the use of smart contracts. Now let's go into a little bit deeper of how smart contracts can be applied to insurances. So one of the things that smart contracts is exceptionally well equipped to do is parametric insurances. So for those that would like a little recap on the differences between parametric insurances and a traditional insurance product, is that a traditional insurance product has complex rating cards and policy wordings that are all designed to indemnify the assured in the event of a loss. Parametric insurances work a little bit more simpler than that. They work on an if this then that statement. So I hope that has triggered some sort of memory from the rest of the presentation, because smart contracts work essentially on the same basis. So in a parametric insurance policy, insurance companies need to verify that the loss event exceeded the trigger event specified in the policy. So let's take a look at an example. You could cover yourself for too much or too little rain. Whatever the details are, that will be set in the insurance policy. So let's take a look at the example. I don't really know whether these numbers make sense or whether this particular parametric insurance product exists, but let's say for the sake of this presentation that they do. Okay, so you have a parametric insurance policy that covers different sums based on how much rain or how little rain has fallen. If a certain area of land experiences drought for 3 to 6 months, the following could be due. 3 months, you can get 40% of your parametric payout. 5 months, you can get 80% of the payout. And 6 months, you can get 100% of the payout. Whatever the details are, they would be stipulated in the insurance contract, which could be written in code. So let's just go over some of the things that blockchain and parametric insurances have in common. They are both autonomous. Once a smart contract has been coded and the parameters have been set, the program needs little maintenance and supervision. Same goes for parametric insurances. Once all the parameters have been set, if a claim comes in, this should be handled with very little human involvement to keep the underwriting costs down. Now, the concept of parametric insurance is so straightforward that premium payments and claim payouts shouldn't need any friction whatsoever. Again, this is to keep underwriting costs down and therefore reduce overall costs. Because the blockchain is a distributed ledger and smart contracts are able to make decisions quickly, overall underwriting costs go down. And lastly, and probably most importantly, they both adhere to the same underlying working principle, the if this then that statement. So I do like my animations, and hopefully this slide will bring everything together. So let's start off with, you have your insurance contract. Let's call it your insurance smart contract, which is essentially a contract in written code with an if this then that statement, which in turn is a digital working version of the contract that is then shared as an identical copy among all the necessary parties involved in the contract. This network would receive real-time weather data that is connected to the policy, which is also shared with the network. And whenever anything happens on the policy, it will make its way to one of these smart contracts, which would determine whether something is true or false. For example, claims being paid out, or if certain material information pertinent to the risk are changing, the smart contract can act as the first gatekeeper to check whether these things are true or false, and the blockchain can act as a reliable platform to share real-time data. So if you're looking at this slide right now, and you're someone like me that likes to look at things critically, there's one area of this system that I think is a bit vulnerable. And if you can't see it, let me show it to you right now. It's the weather data, or data in general, because whatever you put into a system, it's only as good as the data that you put in. So here we have a saying, garbage in, garbage out. And this is exactly the point I'm trying to make here. Because if you have a system that works flawlessly and it is 100% reliable on data being inputted into the technology, but the data is wrong or the data is compromised by whatever reason, then the whole system collapses. So your analysis is only as good as your data. So you might be wondering, how is one able to ensure themselves that the data that's being put into the system is correct? Well, I'd like to introduce to you the concept of oracles. A blockchain oracle is essentially a third-party service that provides smart contracts with information from the outside world. So it is the layer that queries, verifies, and authenticates external data sources, usually via trusted APIs, and then relays that information to the blockchain. Okay? So for those who don't know what an API is, it's very simple. It's basically a piece of software code that lets other systems talk to each other. So here's a picture of how that could work. So you have your real world data, and then you have your smart contract. So it is very important to note, very, very important to note, that a blockchain oracle is not necessarily the data source itself, but rather the layer that queries, verifies, and authenticates external data sources and then relays that information. So how oracles work and what kind of oracles are out there is a little bit outside of the scope of this presentation, because that warrants a presentation on its own. But essentially, this is how data is being vetted on the blockchain. Okay, so let's summarize all of the points that we've discussed in the last 15 minutes or so. Blockchain is simply a new record-keeping technology which is transparent, decentralized, and unchangeable. Smart contracts are computer-coded if this then that statements, which appear to work very well with parametric types of insurances, i.e. they are index-based and data-heavy. The technology is useless if the data input is compromised, but this can be mitigated through using a reputable oracle. Okay, so that's it for now. I would like to thank all of you very much for your time, and I hope to see you in person someday.
Welcome back. Just so that you remember, we are live on YouTube, Facebook, and LinkedIn. And our hashtag is Tanzania Insurance Convention 2021. Please keep sending out your tweets, your messages, and use the hashtag. And also don't forget to post your comments and questions, because we are listening and responding to you real time. It was so interesting to see how InsurTech and blockchain and data all come through together. Andrew was able to really demystify all this for us, and it's exciting because I think that's one component that I picked up from his presentation, how insurers need to be thinking differently and innovating. Even simple changes can make a world of difference.
Yeah, true, for sure. Data is the kind of a capital investment that we have done for quite a long time, and I think it is high time that we need to make use of data to move from where we are. So we look forward to seeing most of things implemented.
Yes,
and I tell you, the future is exciting.
Oh, for sure, for sure. Tanzania in 2030 will be something else.
Very possible. Stay tuned. We'll be right back in 3 minutes after a commercial break. Thank you.
This conference is officially sponsored by Rochester Reinsurance and Tanzania Reinsurance Company, and co-sponsored by Association of Tanzania Insurers and Continental Reinsurance. Our gold sponsors for the event are Alliance Insurance, Sanlam Insurance, Meticulous General Insurance Company, Bharat Reinsurance Brokers, Howden Puri Insurance Brokers, Jubilee Insurance, NBC Bank and Zanzibar Insurance Corporation. Our silver sponsors for the event are Tanz India Assurance, Reliance Insurance, Mayfair Insurance, CRDB Bank, MGen Tanzania Insurance, Assemble Insurance, Smart Policy Insurance Platform, Heritage Insurance, Score Insurance Brokers, Demeter Insurance Brokers, Reinsurance Solutions, Strategies Insurance, Metro Life Assurance, Malembe Insurance, Grand Re, and Milmar Insurance Brokers.
Habari, kwa jina naitwa Arafat Ali Haji, mkurugenzi mwendeshaji wa shirika la bima la Zanzibar. Shirika letu linatoa huduma tofauti za kibima, kuanzia bima za magari, bima za moto, workmen's compensation, bima za marine na bima zingine tofauti. Shirika la bima limesambaa nchi nzima. Ni shirika ambalo lipo katika mikoa yote mikubwa ya Tanzania. Na kwa upande wa Zanzibar, tupo hapa makao makuu, maeneo ya Mpirani, au kwa wanamichezo wamezoea kupaita Mau. Zanzibar Insurance na mawakala nchi nzima. Mawakala hawa wapo katika maeneo yenye kuvutia kabisa, maeneo ambayo yanafikika kwa ajili ya kuboresha huduma zetu na kutoa huduma kwa wakati. Mawakala hawa wamekuwa ni sehemu kubwa sana ya kulisaidia shirika hili kuweza kutoa huduma zilizo bora kabisa, ambazo zinamridhisha mwananchi ambaye anatumia huduma za bima, na yeye aweze kubaki salama katika shughuli zake za kila siku. Kwa sababu hizi,
purpose. It's what drives us in all we do. The why to our what, the North Star, the common goal. Purpose isn't something we can see or measure by itself, which is why we call it a sense of purpose. But it's the difference between going and going somewhere. So then, what is our purpose? Our purpose is to empower generations to be financially confident, secure, and prosperous. Our purpose turns giving support into being the foundation, investing for someone into investing in someone, having power over others into empowering others. Sanlam's purpose is inspired by you. You bring it to life every day and as the first contact with our clients, as the promise makers and the promise keepers, as ambitious individuals and dedicated teams. You turn our purpose into action. So, as we distinguish Sanlam as the most admired financial services player in and from Africa, investing significantly in the countries in which we operate in a manner that is responsible and effective for the development of those economies. And while we impact millions of customers by providing access to our products and services, let us remember our purpose and know that together we empower generations to be financially confident, secure, and prosperous.
But don't forget, we are live on YouTube, Facebook, and LinkedIn. Our hashtag is Tanzania Insurance Convention 2021. So please keep tweeting, keep posting, and in the comments section, we are receiving and responding to your questions and also your comments.
So we move on to the next speaker, Mr. Dipankar Chirya, who will be speaking about the changing face of agriculture risk today. And from his presentation, we're going to learn a lot about the current challenges affecting the agriculture setup in Tanzania. In the absence of insurance, we have seen that, we'll be still making baby steps. So insurance is very critical. But he'll also be giving us experiences of what has been happening in other markets, in India, and other countries, those that have implemented insurance agriculture scheme. So allow me to introduce to you and to bring to you Mr. Dipankar Chirya, who has worked with 3 major insurance companies in his 34 years of association with the insurance industry, and have been in leadership role as a head of business for many years. Dipankar is the Chief Executive Officer of Jubilee Insurance Company of Tanzania. He has studied economics and management from Delhi University. He's an MBA from the Faculty of Management Studies, Delhi University. He's a fellow of the Insurance Institute of India. He has also acquired a professional diploma in digital marketing. He holds an advanced diploma in management from All India Management Association. Dipank is also a PhD degree in business administration from the prestigious University from India. This is such a massive experience. So we welcome Dr. Dipank on the stage for his presentation. Thank you so much, Dipank. Welcome.
The agriculture sector plays a very important role in the overall economic development. And the sector contributes to about 29% of the gross domestic product in Tanzania, employing almost 65% of the population. In 2018, it accounted for something like 3.2% of the global gross domestic product. Mind you, in some of the developed countries, agriculture is done in a very mechanized form. So a lot of huge areas, expanses of land under cultivation, and a lot of mechanization being used there. So lesser people there give bigger output. And a lot of the people are also employed in the services sector, the tertiary sector, which is not so true about countries like ours. Now, as I mentioned, 80% of the farmers hold land which is less than 3 acres. And the sector faces several risks and uncertainties. There are weather anomalies, there are exotic pests and diseases, and of course, the climate change, which is a big challenge. So we need risk and uncertainty mitigation measures such as crop and livestock insurance, and of course, financial support. So that is exactly what we will be discussing today in our session. Now, just to give you a brief outlook of the agriculture scenario, as you can see, some of the countries listed here, all the African countries, you have the contribution of the agriculture sector. So for Tanzania, we've reported some 31%. 31% is the share of agriculture in the GDP. Then you have South Africa with 2.4%, and you would also have other countries like Mauritius, 3.5%. But as you can see, most of the countries here ranging between 20 to 30%. Okay, and then the smallholder farmers. Also, this gives us an idea about the share of the smallholder farmers and insurance coverage in Asia, the Sub-Saharan Africa, and Latin America. It gives you a nice picture. Now, just to give you a broad outline of what exactly we are talking about and what are the basic parameters involved, we are talking about a population of 58 million in the country today, right? Of which dedicated farmers are about 9.36 million, right? And 80% farmers own less than 3 acres of land. So I think you get the picture. 9.36 million total farmers, and of which 80% farmers owning less than 3 acres of land. 65% of the population is dependent on agriculture in some way or the other. And the two of the major crops, if I were to name, maize, of course, is the high point, 5.9 million tons, followed by cassava, 5 million tons. These are two of the major crops. Of course, just to tell you and let you know, Tanzania also has a list of cash crops which it grows. You have coffee, you have tea, you have some of the other crops like tobacco. But then having said that, these two, maize and cassava, I think in number of tonnage is the maximum. So with that background, let's now look into the insurance piece. You know, what is insurance? Insurance is coverage of risk. So if I were to list the risks which are actually at hand in the agriculture sector, what are those risks? There would be production risks, as you can see. There are human resource risks, financial risks, production asset risks, market and price risks, and of course, political risks. Now, please look at it this way, that despite the fact that these risks were there, we were exposed to this risk in agriculture, but actually agriculture insurance started off much later compared to your fire insurance, marine insurance. That's really a little surprising. And let me tell you, if I read Civilization of Mankind, I think human beings turned tillers or cultivating the land much earlier than they started building ships. So that's really a paradox, I think, which the insurance fraternity can answer, why they came in so late into agriculture insurance, whereas so many of the other insurances are already present. Let's come back to the topic. Now, what are the various risks really? I have actually read out the headings, but then what is production risk? Production risk is the kind of risk. It is based on various factors that affect the yield during production process. The factors include weather and non-weather perils like natural disasters, floods, earthquake, volcanic eruption, hailstorm, accidents, and then diseases, pests, collision, access to inputs, and other agricultural practices. So basically, if you see, it's the major gamut of the risks which are involved in the entire agriculture process. Then we have human risks. What are human risks? Human risks are related factors that affect farm business, so health or personal distress, accident, illness, death, and family disputes and threats. Okay. Then you have financial risks. Financial risk, majority of the small-scale farmers in developing countries depend on credit facilities to support them in the farming activities. But most of the arrangements are not well organized, hence farmers face financial risks from high interest rates, poor credit terms, such as period of credit, work with unregistered lenders. And you'll be surprised to know that not only in Africa, but even countries in Latin America and Asia face the same problem. And finally, the market risk. Market risk is, of course, price volatility is still a challenge to not only developing countries, but also to the developed countries. Prices of commodity usually depends on various factors, both regional as well as global, and thus include a demand for commodity, prices of substitute commodities, and government interventions. So it is basically what is everything that affects price. And you know, the basic economics rule here is that the price of a commodity, the substitute for the commodity, the complements for that commodity, and the government interventions which are there. So the entire gamut of this constitute your market risks. The risks in agriculture sector, the production risk and the market risk seem to be the most crucial risk in the agriculture sector. And this is what I tried to mention on the earlier slide, trying to give more importance to the production risk and the market risk. Both developed countries and developing countries have put in various arrangements to ensure that these risks are properly mitigated. And one of the solutions to mitigate the market risk is government intervention. Okay. Now coming to production risk, which I mentioned in the last slide, and it did occupy a major, if you see the individual risks which are involved, you will see a huge quantum of risk falls under this pocket of production risk. And this is where your crop insurance and livestock insurance comes in. And this is how we can reduce the production risks, by giving suitable crop insurance and livestock insurance. Okay, now let's look at the evolution of agriculture insurance. So basically what I'm going to discuss in the next couple of minutes is the evolution of agriculture insurance and how agriculture insurance is present in some of the countries. So just to let you know, as I was mentioning earlier, it is only in the 1930s that USA federal crop insurance was established to cover yield losses from major natural causes in the form of multiple peril crop insurance. For short, we'll call it MPCI. Now this MPCI, if you see, it is actually an insurance policy which covers several of the risks, okay, and several of the perils. So what are they? They're flood, wildfire, drought, windstorm, lightning, and uncontrollable diseases and pests. So these are normally what is covered under this insurance policy. And the insurer must conduct physical inspection before the crop is established in the farm and during the pre-harvest season. Now, there are newer covers which have come up since then, and the new ways of managing the farm risk does not require this physical inspection like the traditional crop insurance. And these products use indices to capture weather data from a particular farm through weather stations or satellites. And some of the new agriculture products adopted by different insurance markets are the weather index insurance, area yield index insurance, soil moisture index insurance. So now, if you see, what does the multi-peril crop insurance cover? The multi-peril crop insurance covers drought, uncontrollable pests and diseases, hailstorm damage, flooding of the crop field, fire and lightning, explosion, windstorm. Okay? The index-based weather insurance, which I have talked about, it covers physical loss and damage to growing crops that would arise due to excessive rainfall and drought. It pays out based on an index measured at the local weather station or by satellite, rather than based on consequences such as fire, pest, and diseases. So unlike the traditional crop insurance, MPCI, the insurance company does not need to visit a farmer's field to determine the premium or assess the damages. If the rainfall amount is below a pre-specified threshold, then the insurance pays out. So it's a newer form of assessment and paying out of the claims, because ultimately we take insurance for settlement of claims. So we have to continuously innovate and find out ways in which things can be done in a much more simpler manner. And that is exactly where this index-based covers are helping out. What are some of the exclusions quickly? See, all insurance contracts have exclusions, and so it's also these agriculture policies will have. So these are like earth movement, nuclear pollution, war and terrorism, consequential loss of any kind, riots and strikes, willful misconduct, arson of any kind, wild animals. So these are pretty standard. Let's move on to the practices in different countries. So in United States, as you can see, we have the agriculture insurance product, namely the MPCI in USA, and it is administered by the government body called the Federal Crop Insurance Corporation, FCIC. The distribution of MPCI product is done through 18 agricultural insurance providers who compete on service as the prices are set by the FCIC. About 96% of crop insurance in the USA is the multi-peril. What about South Korea? In South Korea, crop insurance program was introduced in 2001 with the enactment of the Crop Disaster Insurance Act. The crop insurance program is handled by a public-private partnership and is heavily supported by the government. The National Agriculture Cooperative Federation is this is actually reinsured with the National Agriculture Cooperative Federation, and the entire thing is done on a quota share basis with 6 local reinsurers. The government steps in if the liability exceeds a particular percentage of the premium, right? So over a particular claim ratio, as you can see, the government will step in. What's happening in China? China, of course, the PICC, very strong insurer, has offered crop insurance in China since 1950s, but it was only in 2007 that the central government started a subsidized crop insurance pilot for both crop and livestock. Today, PICC is responsible for 50% of all crop insurance, with the other 50% offered by 12 local and national insurance companies. In Spain, one of the key characteristics of the Spanish agriculture insurance system was the setting up of a pool in which all the insurance companies offering agriculture protection would operate. The pool is managed by a service company, Agro. There are now 29 national and foreign private companies in the pool. Thus, the risk is assumed in the insurance regime. What's happening in India? In India, basically, there are 2 programs which are actually run by the government. So it's the Fasal Bima Yojana, you call it PMFB, restructured weather-based crop insurance program, RWBCIS. So now you see the Pradhan Mantri Fasal Bima Yojana, PMFBY, protects farmers from various non-preventable production risks covering entire on-field crop life cycle, planting risks to post-harvest damages. So it's a wide coverage. Farmers pay a maximum of 2% to 1.5% respectively for the Kharif and the Rabi crops and oilseed crop, and a maximum of 5% for the commercial crops. Empaneled insurance companies charge commercial premium rate. The difference between the commercial premium and what the government has mentioned as the statutory premium is subsidized by the center and state governments. The sum insured for a crop per hectare is decided by the district technical committee under the chairmanship of the district magistrate. So, insurance company for a cluster of district is selected based on a tender bidding, and the L1 bidding through the tendering process conducted by the state governments. Premium subsidy constituted something like 83% of the total premium. So you have a price which is say 100, 83% is a subsidy element, and the 17% is what was actually paid by the farmers. Just to tell you how the cycle is working there, if you start from the top, the tender process by state government bidding. So there is a tender which is given, and you have what you call categories which are actually I would say there are pockets. So for each of these pockets there are separate tenders. So in this tender process, the insurance companies are invited to bid. There's a crop notification and farmer enrollment after this process is completed. The premium payment, there's a premium payment which happens to the insurer. Then a part of it is of course transferred to the reinsurer, so there's a risk transfer risk to the reinsurer. And then there is yield estimation through crop cutting experiments. And then there is claim settlement by the insurer. So this entire process takes place in a very smooth manner and is actually overseen by the government. So these were the experiences that we have in the various countries on agriculture insurance. So now let's move over to another very important topic, and that is what exactly are the challenges which are faced by the various stakeholders. Now the farmers, for instance, I already showed you in the first slide that farmers occupy less than 3 acres of land, most of them. So for them premium is a major issue. High premium rate, insurance requirement like use of RFID chip. So for the livestock insurance, you actually require a RFID chip, which the reinsurers keep on insisting. So that also costs money. I'm told in the market this costs something like $4 to $5. So it's pretty costly. And then of course, inadequate financial support to the farmers, which makes them unable to fund premium on their own. So these are some of the challenges the farmers are facing. So any agriculture policy that we want to, agriculture insurance policy that we want to come up with should take into account how to overcome these challenges. Okay. Now for the insurance companies, if you see, what are the challenges the insurance companies are facing? The use of satellite data still needs to be further explored. Lack of data. So we have lack of data, which is obviously more than us, the reinsurers are worried about this. Low understanding of the coverage and how it works. The financial institutions and the government also face a lot of challenges. Lack of enough collateral to facilitate farmer loans, and need for intensive data collection that can be used to provide subsidies. So for any system to develop, and as you can see, this is something which is of recent origin, there will be challenges, but the way we can go forward is to highlight those challenges and cover those challenges as we move forward. And this is how any system works. This is how any system refines itself. So now, one of the things which we as Jubilee Insurance we did was to see how to overcome some of the challenges which we mentioned, And one of the things which we have actually implemented is to come up with a product in coordination with two very prominent organizations. One is Acre Africa and the other one is TAN Management Insurance Brokers. So the three of us together, Jubilee Insurance, Acre Africa and TAN Management, we came up with a product which is called Bima Pima. But even if you, so what is Bima Pima? Bima Pima is an agriculture insurance policy that offers a weather index based insurance product which protects farmers from losses that would arise in case of excessive rainfall or drought. Right? It provides indemnification to farmers based on cost of inputs. The product goal is to extend the advantage of insurance and risk management to farmers and increase the insurance penetration. With Bima Pima Insurance, the cost of insurance may either be embedded with the cost of which the farmer buys, or the farmer can be given the option of purchasing seeds with insurance or seed without insurance. The seed with insurance option will comprise of a voucher, flyer, and a clear instruction of coverage on how to activate the insurance cover. So you see where we are going. We are trying to get ahead of the distribution. So distribution is a major issue. So that is where we've gone. So Bima Pima provides coverage for a maximum of 165 days of the 365 days of the year on the following stages of the plant growth: the germination stage, the vegetative stage, the flowering stage, and the pre-harvest stage. This platform will enable farmers to conveniently pay their premiums as well as receive their claim payments through the mobile money. So it is only the mobile which helps you. And a farmer with the purchase of seeds would simply open the seed bag before planting, dial that *150*50*77# insert the voucher into his mobile phone, inside the voucher number, that is, into the mobile phone, which would require them to answer a few basic questions, and within 60 seconds receive confirmation of cover on the phone via SMS. We are aware that a lot of people in our country use mobile phones, and I think this is going to help the distribution. This platform is supported by all networks in Tanzania. This is a solution for small-scale farmers, supported by ease of distribution through the mobile network. The premium is affordable with an easy claim solution. We are aware that right now the product is in the pilot stage. A lot of people in our country use mobile phones, and I think this is going to help the distribution. This will develop. This platform is supported by all networks in Tanzania. This is a solution for small-scale farmers, supported by ease of distribution through the mobile network. The premium is affordable with an easy claim solution. So right now the product is in the pilot stage. I'm sure this will develop into a major product as the years go by. So, ladies and gentlemen, we have come to the final slide of the presentation, and finally we are discussing what are the challenges ahead for agriculture insurance per se. Okay? And why are we discussing this? Because like I mentioned, once we know the challenges, we would know that these are the challenges we need to overcome. And then, the thinking process is set to bring about the solutions. And once we bring about the solutions, we will probably have a better environment for insurance. So first and foremost is the development of agriculture insurance experts for product and pricing model. There is a shortage of agriculture insurance experts for product and pricing model, and we also need a lot of veterinarians and agronomists. Why do we need them? We need them for the crops, for the livestock. So that is where the job of a specialist comes in. Then apart from that, there is lack of yield data, right? And for example, let's say the average yield per district, we don't have accurate estimates of that data with respect to certain crops. So when you go to the reinsurer, there is an issue, and if we are able to give proper and adequate yield data, we would probably get better reinsurance rates. So once we get better reinsurance rates, these rates get passed on to the farmers, and we're probably able to even price our products cheaper or let me say, we'd be able to price our products better, then risk management awareness. So, you know, the farmer, like I mentioned, is mostly small farmers. So they have to first think about the basic things. You know, where to buy the seeds from, where to get the money to buy seeds, where to have their basic sustenance, food, clothing, you know, shelter. And after that comes insurance. So if I was a farmer, I was a small farmer, and I were to put 1 shilling, you know, to buy an insurance policy, I would like to know what that 1 shilling is going to get for me. So if I were to know what that 1 shilling was to get for me, I would expect my insurance company to tell me that this is exactly what you're getting from that 1 shilling. So I think what is required is a little bit of insurance awareness, product awareness, and how it's going to help the farmer to buy that insurance, to do the risk management. Of course, needless to mention, support is also required. Without reinsurance support, we cannot have big policies being floated. We need to have a distribution model which is able to collapse this cost, so that ultimately the price which we offer to the farmer is a very economic price. So these are some of the challenges which I just mentioned. I'm hoping that now that we've listed some of the challenges, we would be able to overcome these challenges in the coming near future, and I see a great growth for agriculture insurance in Tanzania.
Benjamin, what do you think were the salient takeaways from Dr. Dipankar's presentation?
Well, quite a number. I just mentioned a few that I think if we work on them, we should see as moving forward, you know, in this industry. So he spoke about the evolution of agriculture. You know, there's quite a lot of things that the government has done, and the, you know, the regulator. There's a lot of work that, and I think what is the most important is to have a coordinated mechanism between the private sector, the government, and the regulator to ensure that, you know, we reach at a point where we have the agriculture insurance scheme implemented in Tanzania. And he has also mentioned, you know, inadequate funding to these projects. So I think he has urged the financial institutions to play part in making sure that, you know, farmers can also have access to funds. Thank you so much. We're moving on. Please don't forget that we're live on YouTube, Facebook, and LinkedIn. Hashtag in the Insurance Conversion 2021. Please do not hesitate to put your questions or your comments. We'll be live responding to all your queries, your comments, and your questions. Thank you so much. Stay tuned. We'll be right back in 3 minutes after a commercial break. Thank you.
Welcome back, and we are ready to move on to our next presentation. But don't forget, we are live on YouTube, Facebook, and LinkedIn. Our hashtag is Tanzania Insurance Convention 2021. So please keep tweeting, keep posting, and in the comments section, we are receiving and responding to your questions and also your comments.
We really need to appreciate the audience. So far, we have seen a couple of questions coming in and comments. Yes. Very good observation.
So I am introducing our next speaker. His name is Mr. John Njoroge Kiguru. A bit about James. He is the Assistant General Manager Agriculture at J.D. Border. And he has an interesting background. For the last 10 years, he's been in insurance, but prior to that, he was able to work in the agricultural space as well. In terms of some achievements, he's worked in terms of multi-sectoral symposiums, looking at digitizing agriculture insurance and claims processes, upscaling of crop insurance, looking at smallholder farmers, innovation. It's quite vast. And also, quite exciting is the fact he's been able to look at growth within organizations and set up facultative arrangements.
Quite impressive.
Oh, for sure, sure. So James will be covering the topic that is ensuring the future of agriculture during a climate crisis. So I believe there's a link with climate change in this for sure.
Very true.
Yes. And when we had a quick chat with James, he told us that some of the things he'll be talking to us about include climate change and its impact on agriculture. So is there a link between the two?
Yeah, obviously there's a link, and these times, these are the things that you can foresee coming, and they have a big impact to our farmers. So it is becoming a topic now.
It's true. But also, how do we mitigate, and what is the level of impact? Because sometimes impact can be positive. So yeah, I wonder what we're going to hear from him, Benjamin. So audience, we welcome Mr. James Njoroge to take us through.
Hello and welcome everyone to this presentation. We are here to present on this concept of ensuring the future of agriculture during climate change. My name is James Kiguru. Let me start with climate change. It's a common phenomenon. We have heard about it many times. So what is it? It is transformation of climate over long term, which is characterized by the changes in the usual climate of the planet. This is largely caused by human activities. We have also heard about global warming, and this is an aspect of climate change that refers to rising global temperature due mainly to increasing concentration of greenhouse gases in the atmosphere. So what are the causes of this climate change? Like I have said, largely human actions. For instance, they are burning fossil fuels to generate energy. This produces carbon dioxide and nitrous oxide. When we are doing transportation, same results. When we are trying to incinerate garbage, we do have methane gas produced. When we are drilling oil and natural gas, we do have carbon dioxide and methane that are produced, including pollution of groundwater because of this process. So these greenhouse gases that we are talking about, they are largely carbon dioxide, and they are very important because they are the ones that try to trap sun rays reflection from the globe, so that now we have some warming effect on the globe. But nevertheless, when their proportion is more, then they detain more heat, and therefore that's what we are calling global warming. I want to ask this question: can agriculture contribute negatively to climate change? The answer is yes. We do have activities. When we are opening new lands, we do some deforestation, and forest is normally a carbon sink that is trying now to take as much carbon dioxide from the atmosphere. So when we clear forest, and more so if we burn it and get what we say charcoal, then what we are doing now, we are even releasing that carbon now to the atmosphere. Also, when you are doing intensive farming for livestock, they produce methane gas, and also that is one of the gases that, if in a more proportion, then we can have increased or accelerated global warming. And let's have a thread on this global climate change. And I will start with the concentration of these gases. We have seen largely is carbon dioxide. Using our base year as 1959, we were at slightly above 300 parts per million. In 2019, we closed at more than 400 parts per million. If you look at precipitation using a 1901 as our base year, you'll find that we have had droughts when it's negative. We have been having also excessive rainfall over the years, including 2011. When you look at temperature itself, using a base year of 1880, if we insert our curve here, you see they have been increased to about more than 1 degree. All these are impact of climate change. Let's come to Africa, and we see now how does it impact ourselves, that is the climate change. I will start with weather patterns, starting with flooding. We had a recent case of Mozambique in 2000, where we had about 800 deaths and about 2 million livelihoods were affected. Let's take drought home in East Africa in 2011 and 2012. We had a severe one in 60 years that was very worse. When it's come to impact on water supply and quality, a good example is here at home, Mount Kilimanjaro. We have seen the glaciers has dwindled. From 1912 as our base year, we have lost about 82% of the glaciers. Let's come to on its impact on food security, that we are not able to grow food sustainably. We have seen how precipitation is being affected. Then we know we don't have food, and then our food is secure, courtesy of climate change. This also extends to health because of malnutrition, where we have evidence that for every 4 people who are undernourished, 1 is in sub-Saharan Africa, where we squarely sit. Also, when the rainfall is in excess, we do have incidences of malaria and dengue fever that are on the rise. Shelter is affected because of flooding, and our vulnerable population, that is our women, our children, our elderly, are at a risk. Women now find it difficult as they look for the natural resources such as water because of drought. And when there's malnutrition, our children and elderly, they are at risk. And because of this climate change and the scarcity of resources, including forage, we are finding ourselves fighting for the available one. And this is also impacting also the ecosystems of both terrestrial and marine because of this climate change. Let's look at the money terms of climate change. We start with disasters in Africa, living for 20 years. We have seen that the number of events have increased. Kenya, 60 events, Mozambique, 55, South Africa, 54, and many others. The impact is also high. For instance, if you look at Zimbabwe in 2019, they required a support of 1.1 billion USD dollars to support infrastructure and to rebuild the livelihoods. Look at the disaster by type. Flooding is the highest at 64%, followed by storm, followed by drought, and the rest. But when it's come to the impact, as it caused deaths, droughts take the lead at 46%, and flooding takes that too, and the rest. When it's come to the effect on the livelihoods, drought now take 80%, and flooding takes 16%. So it tells you that we need to do something to be able now to adapt to this drought, as it is caused by the climate change. Let's have a grasp of what is happening globally on the economic losses. We have borrowed this data from Swiss Re, where the economic losses is equals to insured losses plus uninsured losses. Look at the trend. This will show you the increase in the number of these disasters, and you can see that we have quite a significant a portion that is not insured. All this portion is not insured. This is what is insured. That shows you that we in the insurance fraternity, we have a lot to do to make sure that the impact of these disasters are all insured, so that now we're able now to caution the public from its impact. Let's see how this climate change impacts agriculture, and I will talk about the Africa context. And before I also talk about the Africa context, let me also talk about what we envision for the globe, that about 9 billion people will be in this particular globe in 2050, and therefore they require more food. And this is the food that is being constrained to grow, to produce satisfactorily because of climate change. This impact not only the output, but also the way we do the growing, because now when the changes is also on the environment, then the growing has to change, the cost and all that balancing. There's a lot that has the give and take, and that is courtesy of climate change. And we know that agriculture is also part of this problem, but is also a part of the solution, because we have seen how it is also produced causing this global warming, but we see it's part of helping us now to adapt, especially at the food security part. When we come to its impact, that is climate change on the agriculture sector, especially changes that are caused in this particular environment, that is because of temperature rise, increase of dry and wet conditions, and also increase of carbon dioxide, we can have a positive impact. Why? Because some crops would they are not working at the optimal level, and when you increase carbon dioxide, which they use now to make their own food, then that is good news for them. Some, when you increase temperature, that is good news, and productivity now goes up. Then we are even able to plant other varieties in areas that we are not able to plant, and even in the areas where we do the heating, then this is heating is reduced. The cost of heating is reduced because of the global warming. We also have the negative impact. There is reduction of productivity, especially for the crops that are at the optimal level. So the much they can do is to go down. There is a quality degradation because of the increase in pests and diseases, and also the weeds. All these disasters has increased, including the flooding, depletion of the groundwater because of irrigation as we try to mitigate drought and all that. They are impacting negatively on agriculture sectors. Let's flow with the climate as it changes, and we see how it impacts on the agriculture sector. We have come with a semantic representation on the enterprises, that is the one for crop and also the one for livestock, and also the environment, which you have chosen to use hydrology as the environment. So in this case, we find that for this Arab one, we are having biological changes, these quality, and also the choice of where to grow the crop. The ecosystems themselves, because of the changes, we are finding a lot of increase of pests and diseases. We are seeing migratory, that is increasing of biodiversity that are very essential for production of crops and livestock. In livestock also, the biological changes. Now we are not able to trace our breeding well, fertilization and all that because of these changes. So what is happening under this environment is that the water flow is being curtailed, the availability and the quality. And when all this happen, all that goes now to cost of production going high, because as you try to fight diseases, as you try now to look for this scarce water, so you dig deeper in the pockets and the cost goes down, and as the production goes down as well, then the asset value also decreases. Who are the most vulnerable? Of course, the most vulnerable are the people whose the infrastructure are not able to adapt to change, e.g. irrigation, e.g. health infrastructure when the diseases come up. And sub-Saharan Africa, we are those people. Why? Because about 2/3 of us, we are living below the poverty line, and therefore we don't have shock absorbers, and therefore we are most vulnerable. What are the underlying opportunities? Let's flip it and we see what can we get from it? Of course, we know that Africa, the GDP, especially of the sub-Saharan Africa, is largely agriculture. And the livelihood that is being supported by this agriculture is about 770 million. So it means we have a lot of labor that we can be able to tap from. We do have areas that we can be able to be opened up, especially if we do have irrigation, and that the agriculture market is growing. What we are confident about is that we are able now to tap into this particular kitty. So, but what are the challenges? Our infrastructure is not able to support all this. We are just doing 5% irrigation. Our productivity crop-wise is still going down. Our soil, we are mining more than we are digging it, and therefore they are becoming poor with time. But we have a ray of hope that we can be able now to improve our potential by about 60%. And that tells you this is an opportunity. The challenge we can turn into an opportunity. We have done a semantic representation here of premiums per country using from Burkina Faso all the way to Zimbabwe. What I can be able to read out for you is that our potential is, or what we are doing currently, on average is below 10, and that is million USD, and our potential is above 10 million USD. Therefore, we are doing below our potential. Of course, we have some things that can make us smile. We have some infrastructure like in Zambia, where we have a weather index that is being supported by the government through what we are calling Farmer Input Support Program. We also have a program in Kenya for both crop and livestock, that is Kenya National Agriculture Insurance Program. So these are things that we can be able now to replicate in other countries. What is true is that majority of our countries are relying from external funding to be able now to come up with this infrastructure, which is always the starting point. But once they start, we will hope that they are all going to commercialize, and then we can have willing buyer, willing seller basis where the government is supporting the buyer. When it's come to this opportunity, like I was telling you, we can always grow more. Why do I say so? Because look at the premiums that we are doing in Africa, about 320 million, and we have the potential to do about 1 billion. So we have room for us now to grow this particular case. So what are the climate smart solutions that we can come up with to address this climate change? We can be able to use satellite data for us now to mine the data and make it useful or meaningful for insurance. We understand insurance is about the risk, that is the frequency and severity. So once we get this particular data, as we get it from passive sensors or active sensors, depending the kind of satellite that we are using, then we can be able now to come up with solutions such as normalized difference vegetation index, which is used to be able to trace the greenness of the crop. Of course, the greenness is given for you now to appreciate that the crop is green, but the data, the rain data, is about the difference in the rays that they are absorbed and given out by the leaves that they do photosynthesis. But using that, the Kenyan government has been able now to come up with a solution, that is Kenya Livestock Insurance Program, that is using the NDVI that we have talked about. Here what they are doing is that the farmers are insured. The government is paying a premium subsidy 100% with a cap of about 5 heads of cattle per farmer to make sure that there is good equity. And therefore such tools can be used now to mitigate climate change. What are the necessary infrastructure? I will take a good example of Africa Risk Capacity, which is a pool that has been created by the governments in Africa. They have come up with this Africa Risk Capacity so that they are able now to caution themselves against these disasters as they come. So what happens is that the index-based insurance mechanism is used, and whenever there's a trigger, then the governments are going now to get the respective claims payout from this particular kitty that they have come up with. Of course, it's an insurance concept, so there is a premium that they will be able to pay to subscribe based on the levels and the appetite they do have, and then the payout will be paid now to them. So we need such infrastructures for us now to be able now to fight these what we are calling disasters. What about this JB border, where what I'm representing here, we do have an agriculture team that is composed of experts in climate science and environment, agriculture, climate adaptations, and we have potential to come up with such solutions that we can be able now to help at macro and also meso and micro levels to help the Tanzania market to be able now to adapt now to this particular change, climate change, because when change comes, the much we can do is to adapt, so that we're able now to see what is the way forward after we do adapt. So with our reach to most of the climate and agriculture directors from leading global insurance, we do develop capabilities for all the insurance companies, including all value chain, along all the value chains. We're able now to support in the solutions and also in technical support throughout the currency period. I want to have a parting shot that remember, without farmers, there will be no food. And without food, there will be no life. Thank you. And stay safe throughout the convention.
That was an eye-opening presentation. The gentleman has spoken a lot of things that we see every time, every day in the agriculture community. We have seen farmers struggling with, difficult economic climate. What do you think should be done?
That's a good question you've asked, Benjamin. And I think I am going to hand this over to the NALIS working group.
Oh,
yeah. The National Agriculture Livestock Insurance Scheme has a working group that's developing that. The Commissioner of Insurance spoke about this, and one of the things they're looking at is development of that scheme, and one of the areas is climate change. So I believe some of these areas he spoke about within the presentation are useful nuggets that will be interrogated by this team to be able to see what can we borrow and integrate.
Wonderful, exciting times, and I'm quite sure that a couple of months or years from now, all these problems will be resolved. There will be a solution, and today we have had very good solutions. Please remember that we're live on YouTube, Facebook, and LinkedIn. Hashtag Tanzania Insurance Convention 2021. We'll be responding to your questions and your comments. Thank you so much. Please stay with us. Stay tuned. We'll be right back in 3 minutes after a commercial break. Thank you.
Heritage Insurance tunatoa bima za aina mbalimbali zikiwemo bima za vyombo vya moto, bima za majanga yatokanayo na moto, bima za wizi na bima nyinginezo nyingi. Bila kusahau our unique product Ahadi. Hii product ina cover nyumba yako, biashara yako na ofisi yako. Heritage Insurance with us, best assured.
CRDB Bank ina washirika mbalimbali ambao tunashirikiana nao katika kusambaza hii biashara ya bima. Washirika wetu ni wana viwango na wanatoa bidhaa ambazo zinalingana na matakwa na mahitaji ya wateja wetu. Kwa hiyo pale wanapokutana na changamoto zozote ni rahisi wao wanapofika benki ya CRDB, kwa sababu sisi tuna mahusiano mazuri na washirika wetu kwamba wanapopata changamoto zinalipwa kwa muda ambao ni mfupi na kwa ufanisi, kuhakikisha kwamba huduma yetu haitetereki.
Jambo, habari yako. A very good morning to all my brothers and sisters of Tanzanian insurance industry. You are welcome to Bharat Re Pavilion. Our only objective is how to bring some kind of value addition to our partners, associates and friends. It is my privilege to offer to you all our services. Bharat Re also has a Global Bharat consultancy company where we provide consultancy on actuarial services, we provide services on claims management, medical insurance and accounts conversion to IFRS 17. Remember, Bharat Re is your friend for all your insurance and reinsurance needs. Long live Tanzania and long live Insurance Association of Tanzania. Remember Bharat for your insurance need. Thank you very much.
Habari, karibu kampuni ya MGN Tanzania. Kwa majina naitwa Mr. Sesani Maulid. Niko hapa kukufahamisha juu ya bima ya kilimo. Bima ya kilimo ni kinga ambayo hutolewa kumkinga mkulima na hasara zinazosababishwa na majanga mbalimbali ambayo hutokezea shambani kama vile mafuriko, ukame, moto na wadudu waharibifu mfano wa nzige au viwavijeshi. Mkulima au kikundi cha wakulima kilichopo katika kilimo cha mkataba wanaweza kuchukua bima hii. Na lengo kuu la bima hii ni kuwafidia wakulima kutokana na hasara zilizosababishwa na majanga niliyotajwa hapo juu, ambapo gharama zote zilizotumika shambani au faida iliyokusudiwa kupatwa na mkulima hufidiwa baada ya hasara kuwa imetokezea. Tumie fursa hii kukukaribisha. Karibu MGN Tanzania, the insurer of preferred choice.
Reliance is the fastest growing company in Tanzania and is among the top 10 insurance companies with a strong financial and A rating from Global Credit Rating Agency. The company has a wide distribution of network with branches in Arusha, Mwanza, Dodoma, Mbeya, and Zanzibar. Reliance is among the very few companies involved in selling agriculture insurance policies with a dedicated agriculture insurance team including a qualified agronomist. The company has tied up with a wide range of international players in agriculture insurance including top-grade global insurers.
So we still think the organizing committee, the session has turned to be very exciting. We have seen a lot of, informative presentations that we have taken, and we have seen how they have really captured what we have seen to be challenges in the markets. So we move on to the next speaker, Mr. Agrotosh Mokereje, who will be speaking on how agriculture risk modeling has evolved to meet needs of the rapidly changing environment. Ladies and gentlemen, please allow me to introduce to you Agrotosh Mokereje, who is the Managing Director and Chief Actuary of Risk Shield, a technical service provider and consultants on inclusive insurance, which specializes on agriculture and index insurance products. Agrotosh Mokereje is a fellow of the Institute of Actuaries, UK. He has worked for over a decade in inclusive insurance on products and projects relating to over 40 countries in Africa, Asia, Australia, and Europe. A big round of applause to Mr. Agrotosh Mokereje, please.
Hello, everybody. Thank you very much for attending this session. My name is Agrotosh Mokereje. I'm the Managing Director and Chief Actuary of Risk Shield Consultants. So thank you for your time today for listening to this talk. I wanted to share with you some of the more recent developments related to agriculture insurance products as well as distribution models, many of which would be quite applicable in the context of Tanzania. So just to start off with, I wanted to give you a quick overview on what is it that we do and the types of experiences we have. Very briefly, before we go look at some of the details of the products and distribution channels which could be relevant in the context of agriculture insurance. So to give a quick overview of Risk Shield, we are basically a specialist technical service provider and consultancy company. We are based in Zambia, but we are working in many different parts of the world, in over 30 countries now over the last 6 years. We've worked in Africa, in Asia, Europe, some work in Australasia as well. And in this time, the kind of areas we have worked on are relating to actuarial expertise and technical support for product implementation, also feasibility studies and diagnostics relating to inclusive insurance and agriculture insurance in particular, capacity building and trainings for different types of stakeholders, and operational support as well for implementing the actual products. So in this time, apart from the consultancy work we do, we've also worked as service providers, and as a result of this, we have worked with many, close to 30 insurance companies now, and about 40 other value chain stakeholders like banks, MFIs, agribusinesses and so on, also with governments, farmer organizations. And through that process, over 4 million farmers have been actually insured by these products in the last 5 years, for example. All right, so let me now, with that background, and maybe just a little bit about the countries we've worked in. So as you can see, a lot of the work has been in Southern Africa and East Africa. In more recent years, we've also become quite active in West Africa, and of course in Asia as well, in South Asia and Southeast Asia as well. Okay, now to get to the details that we wanted to cover in this short presentation. So one of the product categories which we see as being quite applicable both in Tanzania as well as other countries in the region is weather index insurance. So many of you might already be familiar with the concepts of weather index insurance, but just to give a quick overview. So with weather index, essentially the insurance coverage is not based on farmers' individual losses. It's based on predefined weather conditions. Now, these bad weather conditions, such as drought or excess rainfall, flooding, dry spells, these can be monitored using weather stations, but also using satellite technology. So one of the developments over the last 5-6 years now has been the increased use of satellite data in different countries in Africa. Virtually all the weather index products in Africa now are actually based on satellite data, which is quite interesting. With satellite data, this data goes back to nearly 40 years now, about 38, 39 years. And the data is available on a live basis, usually on a daily basis, or at least every 5 or 10 days, the data can be easily accessed. So it becomes a very good baseline that we can use for pricing, designing, and for claim settlement as well. Because with weather index, essentially the claims, like with any other indexed insurance product, the claims do not have to be reported by the farmers or verified by the insurance companies. It's automatically triggered based on the weather conditions. So as you can see in the graph here in number 4, that as soon as if it's rainfall, if it's soil moisture, as soon as it's below the trigger level, automatically it would trigger a payout. Now that payout can happen either directly to the farmers, or it can happen through the financial institution, through the agribusiness, the input supplier, and so on. And of course, that depends on how the product is being distributed. So if it is being distributed through a seed company, for example, then it makes sense for the payout to be through the seed company. If it is being linked to loans, then it makes sense for the payouts to be linked to the loan amounts. All right, so that's a quick overview of weather index. Of course, another product that has become, quite prevalent in the last 2 or 3 years now is yield index insurance. Now, yield index insurance, what is yield index insurance? Basically, it's a product where farmers are compensated on the basis of average yield measures in a particular area. Yeah, so this is not covering the farmer's individual yield or individual loss experience, not at all, but it's covering the average yield that has been experienced in the area. So that could be a local government area, it could be a village, it could be a sub-district level, basically. It could be at an agroecological zone level as well. Yeah, so it's still an index insurance. It's not an indemnity-based product based on individual farmers' losses and individual loss assessment, but it's based on the average yield in the area rather than weather conditions. Yeah, and again, similar to weather index, it works in a similar way that you have a predefined normal yield, a predefined trigger, and if the actual yield is less than the trigger, then automatically it would trigger a payout. Yeah. Okay, and then another category I wanted to talk about quickly is livestock insurance. So with livestock insurance, this can be basically would compensate farmers in the event of the livestock dying, or it can also be based on satellite data whereby based on the, for example, the vegetation conditions or the weather conditions in a particular area, it can automatically trigger payouts. Now, with livestock insurance, it would be usually there would be some preconditions, especially if it's an indemnity-based product. Then there would be some preconditions on the farmers would have to follow good farming practices in terms of vaccination, spraying, deworming their cattle, and so on, potentially keeping the cattle within enclosures rather than letting them graze openly, and so on. So those could be some of the criteria that is applied. It doesn't always, it's not always applicable, but it could become applicable. All right, so these are the three main categories which are relevant for small-scale farmers. There are some variations whereby you could also have indemnity-based products or hybrid products. They could be flood index products. So there are some exceptions, but these are the main categories we see: the satellite-based, weather index, area yield index, and livestock insurance products, both indemnity and index options. Now, generally speaking, of course, there are exceptions, but generally speaking, how can we tell? So let's say if you're an insurance company in Tanzania or an agribusiness or bank in Tanzania, how do you make this decision or the choice as to which product would be suitable for which types of risks, for which types of farmers? This is a matrix that you could use as a kind of checklist for, to understand when it may or may not be suitable. So for example, with weather index, this is generally quite suitable for small-scale farmers where the farming is weather dependent or rainfall dependent, and where there is overall there is a good accuracy of the underlying weather data. So that also important for the underlying weather data to be actually accurate, to be actually reflecting what is happening on the ground. Yep. Now, it is not recommended if the farming is heavily irrigated. So as a result, it may not be that dependent on the rainfall conditions anymore, though there might still be a link, but it may not be strongly dependent on rainfall conditions. In that case, it's not really that suitable. Similarly, if the accuracy of the weather data is questionable, it's not seen to reflect what is actually happening on the ground, then of course it's not suitable. And also if there's an expectation of indemnity-based loss assessments, so for example, for certain crops or certain categories of farmers, they might actually want, they might actually expect the insurance company to come and assess the loss before the compensation is paid, or the loss is assessed, basically. So in that case, if the expectation of the claims is on the indemnity basis, then of course weather index or even yield index would not be suitable in that case. Now with yield index, it is suitable if there's granular yield data, if the yield data is available at quite a localized level. That yield data is representative of the farmer's actual yield, and if it can be available quickly enough in order for claims to be paid in an efficient basis. Generally, it is not recommended if the yield data is inadequate, if it cannot be collected on a cost-efficient basis, or it takes a long time for the data to be collected, which would lead to delays in the claim payments. And also if there's a poor correlation between the yield index and the farmer's losses. Now, that might sound like, that should not be applicable because the yield is what the farmers have achieved. But in reality, sometimes there is a big difference between the yield index and the farmer's losses for various technical reasons, which I won't go into right now. But there might be a difference between the official yield data, for example, and the actual yield that farmers are experiencing, or indeed the yield at sub-district level might be very different to what the farmers are experiencing at the village level. So that becomes an issue in terms of basis risk, which is of course relevant for weather index, but it's also relevant for area yield index. And of course, the concentration risk is also there with yield index. There could be a higher concentration risk for insurance companies, especially if, let's say if the product is being done at the agroecological zone level or at the district level, then there can be a huge concentration risk for the insurance companies if that is done along with the spatial basis risk. All right. And then indemnity insurance. Now, generally, I did not really talk about this much earlier because this is generally not suitable for small-scale farmers because of the challenges being that it's very difficult to apply without the presence of good claims management or loss assessment as well. If the historical yield and loss data may not be available, farming practices cannot be monitored reliably, and all of these reasons generally makes it quite difficult to reinsure. On the other hand, it can be feasible even for small-scale farmers, I would say, if a lot of these factors are satisfied, like if there is good quality historical yield and loss data available, if the loss assessment capacity is viable, it can be, the cost of the loss assessment can be absorbed within the insurance premiums, and at the same time, without making the product too expensive, and with the product still being profitable for the insurance companies. And if the underwriting is possible, so this would generally require the insurers to have some agronomists, some specialists on agriculture insurance in their team, who would actually need to do a lot of specific underwriting related to the risks, such as has the crop emerged, the farming practices, the risk mitigation practices in place, and so on. So there are some cases we see with, for example, with crops like tobacco in countries like Zambia, Malawi, Zimbabwe, where we see that these types of products are being done. Also in Tanzania with tobacco, we've seen indemnity-based products being implemented. But generally speaking, it's quite difficult to implement, especially for small-scale farmers. So I would suggest, this is a product that insurers can consider, but not to focus on the indemnity option too much in the context of small-scale farmers, at least at this stage of the product evolution. Now, with livestock insurance, yes, these can be captured. The livestock index insurance is feasible if the index can reliably capture the risk events. If the livestock practices are actually exposed to weather risks or other risks such as lack of vegetation, which can be monitored through satellite data, and also if basic data points are available, such as GPS coordinates. It is not feasible, or it's not recommended generally for very closed livestock farming systems if the indices, let's say if it's based on weather conditions or vegetation index, it does not really, if it does not directly relate to the risk exposure for the livestock. And for very large-scale livestock operations as well, such as large-scale poultry farming, for example, where many of the weather and other parameters can be controlled. In that case, index insurance would not be directly suitable in most cases. Livestock indemnity insurance product can be suitable if good veterinary practices are being followed, for such as the vaccination and so on. It's possible to monitor what practices are being followed. It's possible to track the livestock, for example, using ear tagging or radio frequency devices. And it's also possible for the cost of these monitoring and risk management to be absorbed within the insurance product itself. So you can see there are quite a few prerequisites before one can say that livestock indemnity is feasible. But of course, it's very challenging, again, for small-scale farmers, or if the practices cannot be closely monitored, and also if the veterinary services are not sufficiently reliable, or in some cases, they may not even be available. So they could also be subject to fraud, or they could be too expensive to implement as well. So those are some of just a few guidelines or checklists that you can think about when you are making decisions about which product category may or may not be suitable for your target market. But one very key aspect for insurance companies to also think about in relation to your target market is, what are the benefits really? What is it that I'm trying to offer to the farmers, to the other value chain actors? And this is easier said than done. Usually as insurance professionals, we don't always think about the benefits for the end customers as much as we should do, probably. I'm guilty of that myself as well, even having worked in the sector for over a decade now. We would think about, if we think about what are some of the potential benefits for the farmers at the end of the day. So these are some, again, not all of them would always apply, but these are some potential benefits. One, of course, is that insurance would, protect the farmers in the case of losses, especially in the very bad years. So it may not protect the farmers in every year. It usually would not protect the farmers in every year, but maybe once every 5 years, once every 10 years, depending on the frequency of the product in terms of how it's expected to pay out. It would provide some sort of risk mitigation, some sort of compensation for the farmers. So there's a livelihood protection aspect to it, right? But then, of course, beyond that, there are many other potential advantages or potential benefits for the farmers. One, of course, that the insurance payouts can make it easier for farmers to plant again. Yeah. So this is very interesting application, particularly for weather index insurance, where payouts can take place very quickly. Even as the season starts, there can be a payout within a few weeks of the season starting, potentially, in the event of dry spells taking place, or excess rainfall or flooding, whatever the insured events are taking place. So so basically the insurance payouts make it easier then for farmers to also access inputs again, for farmers to replant so they don't lose out on an entire season. Also, having insurance, we've seen over the years, I'll try to give a few examples on this, but over the years we see that insurance can also actually improve farmers' access to credit, access to finance, access to inputs as well, access to the off-takers in the value chain. So overall, all of these stakeholders, such as the financial institutions, input suppliers, off-takers, may become more willing to do business with the farmers because the farmer has an element of insurance, so they become lower risk for all of these value chain actors to work with the farmers. And that's really important for the farmers, because at the end of the day, for the farmers, they really care about being able to access inputs, good quality inputs on a cost-efficient basis, having a market where they can get a good price. Then, that itself will solve a lot of the problems that the farmers face. Then in addition, of course, farmers can also benefit from trainings, from financial literacy, and awareness raising on financial services, which comes about as a result of the insurance trainings, as a result of the insurance awareness raising, which should usually be done in an integrated way. And also other advisory services such as weather forecasts or pest warnings. These can also be sent to the farmers, which can make them more resilient overall. But also very important to to take a step back and think about what are the potential impacts or potential benefits again of other value chain actors. So as much as it's important to think about the farmers' benefits, it's also important to think about the benefits for the banks, the microfinance institutions, the contract farming companies, the input suppliers, and so on. And these are some of the benefits which we've seen over the years. I won't go into all the details, but broadly speaking, for the banks and MFIs, insurance can reduce the risk overall. It can make it easier for them to give out loans on a risk-informed basis. It can improve their relationship with the farmers as well. Overall, it can reduce the portfolio risk for the banks and MFIs. So one of the interesting developments we also see in the last few years is banks are actually using insurance more at the portfolio level in some cases, although they are still not doing this as extensively as they could do. But in some cases, they're using insurance as an alternative to credit guarantees, for example, or to complement credit guarantees. So this is a space that I would highly recommend insurance companies, regulators, central banks to also intervene to see, is there a role that the insurance market can play to actually, not just for insuring the farmers directly, or even for insuring the farmers through the banks and MFIs, but actually to insure the banks and MFIs themselves. Because if that can be done, then it becomes easier for banks and MFIs to give out more specific products, such as seasonal single repayment crop loan products to the farmers, for also to lend to farmers for specific crops, maybe for riskier areas. So all of that can actually lead to much better financial inclusion, much better access to finance for small-scale farmers, which was, of course, it has the potential of improving the yield and production for the farmers as well. Some other ways in which insurance can help for the agribusinesses is it can reduce the defaults. So if there's a credit exposure that the agribusinesses such as input suppliers have or contract farming companies have, it can reduce that credit exposure. It can also be used as a sort of as a kind of marketing tool by the input suppliers for actually promoting the sales of their products for seed and fertilizer companies. It can improve the loyalty they have in terms of farmer loyalty and so on. And sometimes we've also seen in countries like Zambia, Malawi, that it can also reduce side selling for the farmers because of their access to the insurance products. Now, to give you a quick overview, having talked about some of the product types and some of the potential benefits, when we are developing these products, these are some of the broad stages in which the work has to be done. So ideally, there should be an initial feasibility and technical assessment to understand what data is available, who are the relevant stakeholders, what is the operational model which can be used to implement the product. Then the product concept itself, the sample products can be tested with the farmers, with the value chain actors, of course, with the insurance company, the reinsurers. And then there's quite a few actuarial and technical functions which come into play, such as the data analytics, understanding which data sets can and cannot be used, including satellite data, including agriculture, yield and loss data. All of that goes into the product design and pricing work. And then, of course, the insurance placement and reinsurance work as well. The monitoring process, which would be used for monitoring the claims, monitoring the performance of the product, would also fall in this function. And then, of course, the operational model and the marketing and distribution work is extremely key. So to actually provide the capacity building and trainings for the different stakeholders involved, including the value chain actors, figure out how the premiums can be paid, how the claims can be paid, and so on. And then also, generally to see how the sensitization can be done for the farmers, for the field operatives, and so on. Before, of course, the product is finalized and then fine-tuned, the policy wording is fine-tuned, and then the product is actually launched. So just to end on this last point, that if based on what you've heard in this short presentation, if you are interested or you see that there's scope of having these tailor-made index insurance products for your business, for also for associated farmers, of course, in that case, please do get in touch with us. I'm sure you can get my contact details as well. And what are the data requirements, or what are the practical next steps that would be needed? Firstly, it's to simplify them. There are three essential things needed to understand where the farmers are located. So either the GPS coordinates of reference points close to the farmers, or of the areas, or maybe the agriculture localized areas like the sub-district level locations, if those can be known, to know which crop is relevant here, the duration of the crop cycle, when are the farmers planting. Those are really the essential points we need. Of course, we need many other information as well, but those three are the essential things needed. And then, of course, it's good to have other information like what are the risks which are experienced, to have some information on the crop production or yield data, to understand if that is actually representative of the farmer's yield or not, the expected number of farmers and hectares, what is the cost of production, any experiences of particular seasons when crop losses occurred, and the reasons for these losses. But these are, strictly speaking, not extremely essential. I mean, they're very important, but not essential information. The essential information is the first three points that I mentioned. All right, so I think that's all I wanted to say today. So thanks very much for listening to this talk, and I hope you found it useful to some extent. Please do get in touch. I've put down my email address. My WhatsApp number is also there. So feel free to get in touch. We are working in Tanzania currently. We've been developing and implementing and yield index product in the Arusha region this year, and that product has performed quite well. We've also worked in Tanzania related to weather index and other products in the past. So we would be very much interested in potential collaborations with different companies in Tanzania. Thank you very much. Bye for now.
Stay tuned. We'll be right back in 3 minutes after a commercial break. Thank you.
This conference is officially sponsored by Rochester Reinsurance and Tanzania Reinsurance Company, and co-sponsored by Association of Tanzania Insurers and Continental Reinsurance. Our gold sponsors for the event are Alliance Insurance, Sanlam Insurance, Meticulous General Insurance Company, Bharat Reinsurance Brokers, Howden Puri Insurance Brokers, Jubilee Insurance, NBC Bank and Zanzibar Insurance Corporation. Our silver sponsors for the event are Tanz India Assurance, Reliance Insurance, Mayfair Insurance, CRDB Bank, MGen Tanzania Insurance, Assemble Insurance, Smart Policy Insurance Platform, Heritage Insurance, Score Insurance Brokers, Demeter Insurance Brokers, Reinsurance Solutions, Strategies Insurance, Metro Life Assurance, Malembe Insurance, Grand Re, and Milmar Insurance Brokers.
Just to remind you all, we are live on YouTube, Facebook, and LinkedIn. Our hashtag is Tanzania Insurance Convention 2021. We are welcoming and responding to your comments and your questions. Our next speaker and our final speaker, Benjamin, for today, is Mr. Christopher Mazali. He'll be speaking about dealing with disruptive technologies in agriculture, challenges, and opportunities. A bit about Christopher. Well, he works for ECA Africa, Tanzania, as the country manager. He has more than a decade of experience in agriculture insurance development in this market. And prior to that, he was working for MicroInsure in the agriculture insurance division. So he's participated in several crop development programs for different value chains. Of course, maize, cotton, tobacco, paddy, and sunflower. So he has some knowledge on how things work in this market. I think he's also on the ground and in the field as well. So he currently works with insurance companies to help them set up products which can be distributed through the bank assurance distribution models and also through other companies up-country. In terms of his educational background, he has studied at the Institute of Finance Management in Tanzania and also taken some specialized courses with IMD in Switzerland. So we welcome Christopher. It would be interesting for him to share his experiences being on the ground, being in Tanzania, and also letting our audience from all over the world understand a bit more about this market.
Tanzania agriculture sector is a very critical sector. It contributes up to 28% to the country's GDP, and it employs more than 70% of the country's population. It's the most produced food crop in Tanzania, accounting to nearly 62%, followed by rice, 21%, pulses, 15%, and wheat, 0.7%. Cashew nuts are the most produced cash crop in Tanzania, 35.2% of the produced cashew in the country, followed by cotton, 34.9%, coffee, 10.4%, tobacco, 8.6%, tea, 5.8%, and sisal, 5%. Tanzania is one of the leading countries when it comes to livestock production, and also it's one of the countries performing very well when it comes to fisheries, okay, in East Africa and even in Africa. But despite agriculture, being a very key sector to the country's economy, the sector is facing a number of challenges. And here are some of the challenges facing the agriculture sector in Tanzania. One of the challenges is climatic changes and weather unpredictability, where in the past 5 to 10 years ago, 5 to 10 years, farmers in Tanzania have been badly affected by drought, instances, uncontrolled pests and diseases. But also there are marketing challenges. Farmers are struggling to sell their crops at the end of the season due to unavailability of markets to sell their crops, and sometimes lower prices which do not give enough funds to farmers to be able to recover their production costs, but also to improve their living conditions. Another challenge facing the agriculture sector in Tanzania is poor financing arrangements towards supporting the sector to develop. Our farmers, especially smallholder farmers in Tanzania, they are very struggling to get financing support from financial institutions such as banks, microfinance institutions, to be able to access quality inputs, tools such as tractors, planters, etc., so that those financing could, improve and moving, from producing, from farming 1 acre, to 3 acres, and up to become medium and large-scale farmers. Another challenge facing the agriculture sector in Tanzania is poor usage of technologies in farming activities. We still have, some farmers in the country who are using hands, to cultivate their lands. So you can imagine, a farmer of new generation is still, or she's still using, hands to farm, his or her land, okay? So this poor usage of technology is one of the biggest challenge affecting the agriculture sector. Another problem or challenge affecting the agriculture sector in Tanzania is, an organization of our farmers. As I said earlier, agriculture sector in Tanzania, it employs more than 70%, and actually majority of them are smallholder farmers scattered across the country. Now, these farmers, most of them are very unorganized. They are not in groups, so it becomes very difficult for government institutions to be able to reach them and give them the support they need, which can improve their farming activities. Another problem facing the agriculture sector in Tanzania is changing of policies. We have seen in the last few years there have been some changes to the selling of crops in the country, whereby in some instances farmers were not allowed to sell their crops outside the country, which later on affected people or affected farmers to be able to get enough money to invest in their farming activities and improve their farming, and also improve the country's economic growth. Another challenge affecting the agriculture sector in Tanzania, as I said earlier, it is practiced by smallholder farmers. We have so many number of smallholder farmers who are doing 1 acre, 2 acres, 3 acres, etc. Such kind of farming behavior or arrangement, it somehow does not contribute much, to the growth of the agriculture sector in the country, because most of these farm technologies, they're not using proper tools like tractors, planters, etc. So it becomes very difficult for them to grow. Now, as I said earlier, I'll be taking you through technologies which, have been introduced to the agriculture sector in Tanzania, and I will show you now how, these technologies can be used by the government, can be used by institutions like banks, insurance companies, to be able to improve the agriculture sector in the country. Okay. Number one technology which has been introduced in the country in recent years is the use of mobile applications to be able to track the whereabouts of our farmers. As I said earlier, majority of our farmers are smallholder farmers who are scattered, across Tanzania. And you can imagine, Tanzania is one of the biggest countries in East Africa. So having almost 70% of the Tanzania population involving in the agriculture, it is very difficult for service providers like insurance, banks, etc., to be able to track these farmers. Now, because of the technology, service providers like banks and insurance companies can use mobile applications, okay, to be able to know where these farmers are, so that they can go and educate them about different services they're offering, but also to provide complex services like crop insurance services, to be able to offer them weather advisory services, etc. So that's one of very recent technology which is changing the agriculture sector in the country. Another technology or an opportunity or an advantage, brought by these disruptive technologies is the ability of connecting farmers with, market actors, okay? As I said earlier, in some instances, farmers were complaining that they're not getting, good markets for their produces. Now, because of these technologies, farmers can use different applications and softwares, to be able to connect with different markets, or rather, buyers who can offer them fair and good prices for their produces, for their crops, which is a very, very good thing, which helps our agriculture sector in the country to grow. Another opportunity brought by these disruptive technologies is the provision of agronomy services in a digital way to our farmers. Now there is, capacity for authorities which are responsible, to provide agronomy advisories to farmers through digital platforms. Okay, farmers, for example, who are, doing farming activities, for example, in Njombe, okay, or in Mwanza, Bariadi, for example, Simiyu, they can use their mobile applications, to be able to know when, they're supposed to plant. Is it going to rain tomorrow, so that they can avoid to plant. But also, these platforms can even help other providers, service providers, like insurance companies, to be able to customize their product so that they can offer more advanced services to their targeted clients, whom are farmers. Another benefit of these technologies is enabling farmers to be able to access alerts, okay, risk. So that is one of the advantage of these technologies. Another advantage of these technologies is the ability of smallholder farmers in the country to be able to use irrigation systems, which can help them, to fight or minimize the impact of drought. Now, in our markets, there are a number of providers who are selling, for example, solar-powered irrigation systems, which are very affordable. And because in some of our regions or in some of our areas, farmers do not have access to electricity, these farmers can use these solar-powered irrigation system to be able to improve their farming activities in those particular areas. But also, disruptive technologies have helped insurance companies. For example, in Tanzania, there are a number of insurance companies which have come up with different agriculture insurance products by using different systems. Okay, there's one insurance company which launched a product whereby they're using pictures, to be able to assess whether the insured crops have suffered losses or not, and if that particular crops or that particular farmer is supposed to be compensated by the insurance company or not. So you can imagine, instead of the insurance company sending an assessor to go to assess the farm physically, an insurance company can communicate with that insured farmer and tell him to go to his field, take a picture, and send to the insurance company, so that the insurance company can determine whether that risk affecting that particular insured farm can be is insured risk or not insured risk, and if it is insured risk, how much the insurance company will be required to compensate that particular farmer at the end of the season. So another advantage of these disruptive technologies, vision of digital contracting to the insurance products. For example, the Bima Pima product and Lima Salama product, whereby farmers in the country now can buy the agriculture insurance products via their mobile phones, and at the same time, getting the insurance policy through their mobile phones. This is a very good example which shows now how these disruptive technologies have helped to improve the agriculture insurance in the country. Because before it was very difficult for the insurance companies to go to visit individual farmer, convince him to buy that particular policy, but at the same time for that particular insurance company to draft and issue the policy document, as it was handled in a paper, in a document way. But now because of this technological advancement, farmers can buy the insurance contract by using their mobile phones, but also getting all the information, digitally through their mobile phones. So this is very important when it comes to the improvement or development of the agriculture insurance in the country. Another advantage of these disruptive technologies is the provision of financing services to farmers through mobile money platforms such as Vodacom M-Pesa, Tigo Pesa, T-Pesa from TTCL, Halo Pesa from Halotel, etc. Now farmers from anywhere across the country, he can buy his insurance contract and pay for that particular insurance contract by using his mobile money wallet. And also at the time of getting compensation, farmers can use their mobile money to receive compensation from the insurance companies instead of going physically. As I said, one of the challenges affecting the agriculture sector in the country is market for farmers' crops. Okay, in some instances, farmers have been producing a lot of crops, but at the end of the day, they have been suffering to get buyers who can give them a good and fair price for their crops. So because of technology, now farmers can go to different platforms. For example, there's one platform known as M-Mkulima platform, whereby farmers can visit that platform and link with different buyers who can buy their crops in a fair and good price. Another advantage of technology is verification of counterfeit products or inputs. Okay, back in the days, farmers they used to buy inputs without being sure if those inputs are genuine inputs or not. Okay, because there was no mechanism for them to check whether they are buying something genuine or not. But now, because of technology, farmers can use their mobile phones to check whether the inputs they're intending to buy is genuine or not. So this is another very good advantage of disruptive technologies which is happening now in the agriculture sector in Tanzania. Now, if you look now at the big picture, there are so many advantages of disruptive technologies, or there are so many advantages which are happening now in the country because of these advancement of technologies. And in a broader way, I can summarize and say these technologies have greatly reduced the cost of farming in the country. For example, as I said, one of the challenges affecting the agriculture sector is climatic change. And now, because of technology, farmers can use very advanced irrigation systems, in a very affordable cost. So technology has helped farmers to reduce or help them to minimize the risk which could affect their crops due to drought. Another advantage of these technologies is risk mitigation solutions. As I said, before, for example, in Tanzania, it was very difficult for insurance companies to be able to offer different types of agriculture insurance in the country. And the reason why it was difficult, because, as I said, majority of the farmers were smallholder farmers, so it was very difficult for insurance companies to be able to go to sell agriculture insurance products, to an individual farmer. It was very expensive for them to do that. But again, for the insurance companies, they wanted to have enough data, enough historical weather data, enough historical production records for them to be able to determine the level of premium. Another advantage of these technologies is simplification of market linkages, as I said. Another one is confidence to farmers. Now farmers, they have more confidence in investing in agriculture activities in the country, because they know, there are different mechanisms, like I said, like, insurance, which can protect their crops against, unpredictable risks. But also, the technology has helped a lot service providers like financial institutions to be able to provide, services which before it was very difficult for them to provide because of these farmers. I mean, as I said, they are scattered, and it's very, very, very time consuming and very expensive for them to be able to reach them. And here are some of the challenges which, affecting the uptake of disruptive technologies in the country. Lack of role models who can convince others, to use these challenges. For example, I said, farmers can use e-market system to access good markets for their crops. But again, that could be very difficult for a new farmer who does not have enough understanding and knowledge on how to download, for example, an application to be able to access such useful information on how to sell his crop. So they need people who can motivate them, they need people who can show them, and I think that is one of the challenges which is facing the use of these technologies to support agriculture sector in the country. Another challenge is lack of policies to support these technologies to be adapted quickly. I think in the country we do not have a guideline or policy which highlights the importance of these technologies in supporting the development of agriculture sector in the country. Yes, and lastly, as I said before, these technologies are very costly, for both the providers, but also the consumers, whom in our case are farmers. Now, to finalize, the use of technology in Tanzania in the past 5-10 years has helped a lot, the agriculture sector in Tanzania, and you can see it in different perspectives. I would like to summarize in two perspectives. Number one, in terms of improving agriculture, as a subsector it is, okay? I mentioned about the usage of irrigation systems. As I said, most of our farmers are smallholder farmers, and also almost 70% of Tanzanians are involved in the agriculture sector. So, availability of these technologies have helped farmers who do not have access to electricity, for example, to access solar-powered irrigation systems, to improve their farming activities in their areas. That is one angle. But also, these technologies have helped, farmers in the country to be able to access financial services. As I said earlier, before it was very difficult for farmers to be trusted by financial institutions, such as banks, to get loans, to buy, for example, to buy inputs, quality inputs, or to buy tools like planters, etc. But now, because of this advancement of technology, farmers can use insurance, for example, as a guarantee to access financing from financial institutions. So these developments have helped tremendously the agriculture sector in the country. Thank you so much.
Christopher's presentation was spot on. I've engaged with Christopher in my different capacities, so I understand what he does. But when he speaks about it, it brings a new perspective. You think you know it, but when you listen to Christopher, he has something new to tell you and share. So I hope the audience also did enjoy that. And once again, you can share your comments and questions on the different chats. We are live on YouTube, Facebook, and LinkedIn. And our hashtag is Tanzania Insurance Convention 2021. Wow, that was a great way to look at finalizing and the finale for this Tanzania Insurance Convention 2021, with Christopher winding up and showing us a bit about Tanzania and giving a different perspective for all those who've been watching us from elsewhere. And on a sad note, we're coming to the end and the close of this first virtual Tanzania Insurance Conference 2021. To our audience, we thank you so much for being with us. And of course, to our sponsors, we also thank them for making us be here today and sharing. But it doesn't end here. We will be having a link right below If you'd wish to have any more questions answered, get any more clarity on different areas, please feel free to reach out to us. Benjamin, it's been a pleasure sharing this forum with you and being a co-MC. And I hope we'll be able to do it again. Do you think they'll let us do that again next year?
I hope so. This was a very amazing experience, and we have learned quite a lot of things, and we have enjoyed the sessions, and I do believe that we have picked quite a number of takeaways that I believe if we work on, we shall see a big improvement and growth in our insurance sector. So we say thank you so much. Asante sana, merci.
And at this juncture, we welcome Dr. Suresh Kumar, Chair of the Organizing Committee for the Tanzania Insurance Convention 2021, and also Vice Chair of the Insurance Institute of Tanzania, who organized all this for us, to give some parting shots and also take away.
He has been chairing this committee for the past 3 years now, if
Yeah,
I'm
I
not
think it's
mistaken.
3 years, yes.
Excellent.
He's doing an excellent job.
For sure.
Yeah.
Thank you so much. A big round of applause for Dr. Suresh Kumar.
That was a very, very powerful, power-packed. I really did not realize. Hours discussing, listening to various experts in terms of the agriculture insurance and the entire gamut of risk management. The takeaways for various people, at least for me, the takeaway from this particular session has been immense. I've spent many years in insurance industry, but then this is the first time I've really heard what is called as a parametric insurance. I'm sure it might have been quite a learning experience for many of you, if not all of you. My impression of drones has always been that drones are used for weddings and taking photographs. But today we learned that drones can be used even for agricultural management, the risk management part of it, crop mapping, wherein you are able to loss minimization part of it, loss assessments. Now these are things which we would not have really known had we not attended today's the Tanzania Insurance Convention 2021. The Insurance Institute of Tanzania has been extremely delighted to have speakers from all over the world who came to speak to us on this various aspects of risk management in agriculture as well as agricultural financing. We also learnt as to the various initiatives that the governments should be taking so that they are able to promote and encourage agricultural insurance, not just in Tanzania, but in the entire world. Thank you very much for all of you to joining us on this great occasion of the Tanzania Insurance Convention 2021, sponsored and organized by Insurance Institute of Tanzania. We do hope to see you next year at our 25th Insurance Convention, which we hope will be digital as well as physical, so that we are able to interact with each other and learn from each other. Till then, it's goodbye, and as we say in Swahili, asante ni sana.